Good morning, everybody. Welcome back to another episode of The Market Open. It is Thursday, June 11th, and we are live. As you can tell, the COVID is clearing up. Got some energy, got some excitement. I have the ability to speak with a loud voice, but also part of the reason for the energy and the excitement and to be loud is because of the New York freaking Knicks, baby. Last night, if you didn't watch the game, you should go watch the game. That was incredible. That was just, I got up out of my couch. I was running around my apartment by myself, jumping up and down because of how good that game was. This was amazing. This was freaking incredible. I think pre-markets just turned red, or it's about to turn red. No, we're still relatively green, but this was freaking incredible. Knicks in 5. It was unbelievable, dude. It was if you're even a basketball fan, forget being a Knicks fan. What we saw last night was the greatest comeback in the history of basketball. I mean, it was just unbelievable. They were down 29 points with 9:17 left in the third, and they came back. So incredible game. OG hit a game winner at the very, very end of it, and he did it by a literal tip-in, and it was kind of crazy. I'll just share the clip right here real quick. This is about 20 seconds of what happened last night, and this was it. Jalen goes for the 3. He misses. OG comes in with the tip-in after being down 29. Boom. Knicks win. Absolutely crazy. I've been watching basketball for years. This was the craziest game I think I've seen in my entire life. So pretty cool stuff. Shout out to the Knicks. Hopefully Knicks in 5 will get the job done on Saturday, but amazing comeback. And yeah, definitely helped bring a lot of excitement back into me as well. And I don't know, maybe it cured me of COVID. Who knows? But awesome stuff from the Knicks. All right, so we got a lot of stuff to talk about in the global capital equity markets. We have so many headlines that have happened last night, and I think it requires a decent chunk of analysis in terms of being able to break down exactly what is happening. Some of this stuff is like bullish, but also intrinsically bearish. Like there's no way you can't say it's bearish, but you also have to admit it's kind of bullish. And then some of this stuff is just confusing in terms of how the markets are ultimately trying to price it in. Obviously, you've got the S&P 500 right here that took a nasty beating over the past basically 4 trading sessions. We were at 760 at the top, 760.4. Now we're at 729. We were at 729 last night, so we're up about 0.5%. We're getting a nice little Thursday morning rebound. We have the Spacex IPO tomorrow that we'll talk about. But yesterday was a bloodbath. I mean, yesterday was indeed a bloodbath. Oracle, they had a great earnings. We'll talk about why that stock is down 9.5% right here. They just, I think, reported on a pretty bad day. And they ended up saying the thing that I think the street didn't want to hear, even though the street knows that they have to hear it, which is that they're going to be issuing $40 billion of new debt and equity. And, you know, the street has to deal with the fact that there are companies that are going to be raising capital in this way to be able to fund the CapEx. I think the street's a bit exhausted of it, but nonetheless, that's going to be helping them grow. So we'll talk more about Oracle, but I think you're getting a bit of a sympathy bounce right here. The Trump-Iran situation is not getting better either. I mean, you've had a variety of things happen since last night. We did attack Iran last night. Trump just said, this is from the Wall Street Journal, like 5 minutes ago, Trump just said the U.S. will now attack Iran again tonight and seize the crucial oil hub Karg Island in the not too distant future. Did he just post about that on Truth Social? Yeah, he did. The United States will be hitting Iran very hard tonight. At some point in the not too distant future, we will be taking Karg Island and other oil infrastructure points and assume total control of their oil and gas markets, much like we have with Venezuela, which is working out brilliantly for both Venezuela and the United States of America. Okay, so there's a lot to analyze on the AI front. That headline just broke right now. It's not that surprising given the attacks that we had last night. Pete Hegseth, obviously, we saw the video yesterday, the market closed, made it clear that we would be attacking last night and that Iran had their time to negotiate, but now it's time to attack. The problem here is, you know, he said this is not a restart to the war, but it obviously feels like a restart to the war if we're going to be going back and forth with it. I mean, if we're taking Karg Island, the Iranians aren't going to just, you know, let us take Karg Island. They're going to put up a fight, which would assume there is a war that is happening. And I don't know, from that perspective, it is a bit weird to kind of see how this is going to end up playing out. This is what Pete Hegseth said last night. And when we ended up attacking last night, it looks like we're going to end up attacking again today.
Me, we just got done with detailed briefings, but of course he is busy because CENTCOM, Central Command, will be busy tonight because President Trump said we will be hitting Iran hard, and we will be because Iran has a chance to make a good deal, a great deal, to codify what they said they've been willing to do, and they haven't been willing to do it. So as President Trump said, they've been tapping. You can see when someone's trying to tap on a deal. Instead, they're going to have tap bombs dropping on key facilities in Iran from the United States of America. And that's not because we want to restart anything we don't have to restart. It's because the War Department is prepared to set the terms to ensure that we get the kind of deal President Trump expects. And Admiral Cooper,
so they're saying it's not a restart to the war. It's setting terms for the war. And then this is what Trump told Fox News about 20 minutes ago.
This is breaking news. President Trump says the United States will hit Iran very hard tonight. He went on to say in a statement on Truth Social that we will be taking Karg Island and other oil infrastructure points and assume total control of their oil and gas markets, much like we have with Venezuela.
Now, if we're going to be taking their oil, again, I'm just seeing this headline that broke. I knew we were attacking last night, which obviously meant things were escalating. But now with this Trump tweet saying we are going to be taking Karg Island, which is 90% of their crude exports. Again, I don't understand how we still have a ceasefire at that point, unless he's just saying that to say that in hopes of getting the Iranians to be like, okay, we'll capitulate on whatever deal you want us to sign, because obviously we don't want you to take Karg Island. At this point, I don't know if the Iranians even care. I think they're willing to fight for it. And I think they love the volatility and the fact that the war is never going to end, because it obviously is going to create problems for the United States, for the global oil supply markets. It's not going to be good for the stock market, definitely not good for inflation. But it is weird, and it's definitely bearish, right? You have to assume it's bearish. Now, maybe the market's not pricing it in, even though obviously we've had some pretty ugly sessions over the past couple of days. Maybe oil's not pricing it in. Oil still is at $90. So Trump did say yesterday they've been stealing barrels of oil, millions of barrels of oil, and they've been like pumping that into the supply. Secretary of Energy Chris Wright was asked about that, and he said he has no idea what Trump is talking about. So Trump said that yesterday in his press conference that they've been taking oil from Iran, including 22 ships of oil just last night. And then Chris Wright said, I'm not sure what the president is talking about.
Sir, Mr. President, about the latest inflation number, which came out this morning. Could that be a
No, I love it. The numbers were great. You know what I really love? I love the inflation. You know why? Because as soon as this war is over, you know, I can say it now. Something you didn't know. Do you know we've been taking out millions of barrels of oil? Nobody knows it. You know who doesn't know about it? Iran, until right now. We took out the other night 22 ships late at night with no lights.
Well, now Iran knows about it. And again, Chris Wright kind of didn't corroborate and co-sign what Trump said right there. But part of the reason I think oil might not be going crazy is because of the fact that if Trump is right about this, that they've been stealing all this oil or been taking all this oil and pumping it into the supply of the broader markets, then maybe that's what's keeping oil in check. It's just kind of wild that he admitted that yesterday. And I guess they want to let it be known as a form of negotiating or as a form of just like grandstanding. I don't know if the Iranians would be more likely to negotiate knowing that the U.S. is taking oil from them for free. It's just a very weird situation at all levels. And then this is what Trump said this morning to Fox about 30 minutes ago.
Announcing you're going to hit them very hard tonight. What went into posting that?
Well, it's just one of those things. They have no defense. They can't do anything about it. The only thing they have is fake news. You know, they have the New York Times write stories like they're doing great, and they're not. They've been wiped out. CNN and that MS Now or whatever they call it nowadays, NBC had to get rid of it because it was bad for their reputation. But the publicity they have is incredible. It's almost like they're doing well, and they're getting decimated, and they're dying to make a deal. They want to make a deal so badly. But, you know, you read the New York Times and you read the Wall Street Journal, which is so fake. I mean, I know you guys own it, but it's a real piece of garbage. And you read the Wall Street Journal, it's like they did an editorial today about we're not hitting them hard enough. I mean, it's just not hitting them hard enough. We dropped $250 million worth of bombs on them last night. You know, the whole thing is crazy. But and they're really in submission. They just don't know it yet. Okay, to be honest with you, they just don't know it yet.
So look, those are the updates with Iran. I mean, I would imagine at some point this is going to be over. It's now mid-June. It's not over yet. I don't know if this attempt at re-attacking Iran is a way to kind of get them to capitulate. I would imagine it has to be. If it ends up escalating further than that, then it will just go back to a war, and then it will be Israel and the United States fighting Iran and potentially taking their oil and having to deal with millions of people in Iran and navigating the new regime. I don't know how this is going to play out. I think they are going to try to go back to a ceasefire. I think they're technically still in a ceasefire, but if you drop $250 million worth of bombs on them, it doesn't feel like the firing is ceasing. So I don't know. Regardless, markets are up. I think markets are up in sympathy to the fact that yesterday and Friday were horrendous, and Tuesday. So I think you're getting a little bit of a bounce right here. We'll see at 9:30 if the market can hold on to that. We got some macro data to get into, but in terms of the Iran updates, I don't see anything bullish about it. I would imagine it is eventually resolved, but based on everything we're seeing, it doesn't feel like it's going to be resolved right now. And ultimately, time will tell if this ends up being really bad for oil, or if oil can stay stable in the midst of these attacks. And, that is really important given we had a pretty bad CPI yesterday. Given equities also, can't really have oil going up that high. So that's what we got with Iran and the United States. Macro data, jobless claims. We got those this morning, 229,000 versus 225,000. So this is the second week in a row of higher jobless claims, which is not crazy because it's only a 4,000 disparity, but nonetheless, it is more people filing for unemployment than expected. So you are seeing a little bit more action in the labor market, but it's nowhere near the action that would cause the Fed to be a lot more concerned. We are not pricing in a cut for the rest of the year. In fact, we are pricing in a hike towards the end of the year. Hopefully we don't have a hike, but nonetheless, if inflation continues to be sticky, labor market continues to be stable, there is a world in which the Fed would decide that they want to hike. Now, they haven't made that decision to hike, but a different central bank across the world did make the decision to hike, which is the European Central Bank. I had no idea that they were actually thinking of raising their rates. Apparently, this was known that they were going to do this. They raised it by 25 bips in their June meeting this morning, the first increase since 2023. So they went from 2% to 2.25%. The move follows rising energy costs and persistent inflation risks driven by the Iran conflict and disruptions to oil shipments through the Strait of Hormuz. I feel like this is the news today that is going the most under the radar, because look, once one central bank starts raising rates, we saw this back in 2022, all of them start doing it. And I don't think it's inevitable that the United States has to do it just because the Europeans are doing it. But I mean, the Europeans and the United States, like, it's not even just the EU and the US. Every central bank tends to talk with each other because at the end of the day, if the entire world has low rates or the entire world has high rates, it affects the cost of business across the entire world, which affects every single economy. And so I thought it was quite surprising that the Europeans actually felt inflation was getting so bad, which obviously the energy crisis is hitting Europe and Southeast Asia more than anybody, because they're just not as energy independent as the United States. So it makes sense why they are taking this as a precautionary step. But if inflation continues to tick upward and they get that 2.25 to around 3%, we're at around 3.5 right now. It's not going to be something that I think is great for the global economy. It's at 2.25 is probably manageable. It's probably not that big of a deal, but the signaling risk that I think it's sending to all these other central banks is more so a question of like, hey, we did it. We ripped off the Band-Aid. We raised rates. We're not afraid to do it. And if this war persists, inflation persists, or high oil continues to persist, then this is something that we're likely going to continue to do. So, well, it's kind of weird, but nonetheless, that's what they did. And hopefully it doesn't impact the rest of the broader economy. EU energy costs are killing them. Yeah, it's also one of those things where it's like, they have different imperatives that they have to deal with. They don't have the same type of dual mandate that our Fed has. They also don't have the same type of economy with the same type of GDP growth. But it's one of those things we got to keep an eye on. If one central bank's ready to do it, then some of the other central banks might think it's easier to do it. And so time will tell to see if more and more central banks end up making this happen. Okay, so that is what we got from the macro data this morning. I think Trump is on Fox, and I think he's saying a bunch of quotes right now. Let me see. Yeah, I have a couple more clips. Here's what Trump had to say. This came out literally 5 minutes ago about Carg Island.
You know, look, my preference has always been take Carg Island. That's been, Brian knows that. I spoke to him a long time ago. Lawrence knows it. I spoke to him a long time ago. I said my preference would be that. I don't know that America has the stomach for it, to be honest with you. You're going to make a fortune. But I don't know that America has the stomach. I think they'd like to see us come home. But we did it with Venezuela. Venezuela's worked out great for everybody. We've taken millions and millions of barrels of oil out of Venezuela. We brought them to Houston and various other places, Louisiana, where refineries that we have that are incredible. They're going 24 hours a day, making a fortune. And, I like that in this case too. But I'm not sure that America has a long time. It's a little longer process, something that's a guarantee if I want to do it.
Mr. President,
but I'm not sure the country has the appetite for it. Does that make sense to you?
I understand where
as good as it is. By the way, as good as it is, that's always been my number one thing. But as good as it is, I'm not sure the country has the appetite for it, and that's okay. I understand that.
Trump went on to say, we are talking to them and still negotiating. He says Iran is not good at fighting. Trump said U.S. aircraft are flying over Tehran and that they are unaware. Trump says they are negotiating with us to make a deal, but they are proud. And then he says, I'd rather not hit bridges and power plants to hurt civilians. He also says, I don't want boots on the ground. All right, so it looks like they are still negotiating. It's just Trump attacking them to reinforce the power of the United States within the negotiations. I don't know if that's going to help the negotiations or hurt it. You'd imagine that would obviously not make the Iranians happy, but time will tell, and we'll see how this ends up playing out over the coming days. Oil is still not affected by it. I mean, oil is relatively okay pre-markets, even the stock market relatively okay. Now, we'll see when the market opens, given every time for the past 2 days the market is open. Yesterday, we ended up getting the dump at 11 a.m., so it took some time. On Tuesday, it ended up happening around like 9:50. So we got a little bit of a green in the pre-market right here, and we're going to see as the market opens if any of this ends up actually affecting it. Did we get PPI today? We don't get PPI. Did we get PPI today? Oh, crap, we did get PPI. PPI, 4.9 versus 4.9 expected. Okay, so PPI was fine. Core PPI, 0.4 versus 0.5. That's probably why we went up a little bit. I was wondering where the little bit of green came from. Okay, so PPI, this is Producer Price Index, which CPI a little bit more important, but PPI obviously still relevant because it's what producers are paying, which affects what consumers will end up paying. So core PPI 0.4 versus 0.5 expected, and then year over year 4.9 versus 4.9. So that came in line with expectations. Okay, it's not fine. I'm not trying to say it's no big deal, but still. So that was core. Headline PPI, oh my, 6.5 versus 6.4 expected. That's a miss then. Why did markets go up? Why are we green? Huh. Obviously, it's not the best. I'm just trying to look at expectations. 6.4 expected, 6.5. Even a little bit of a miss at these high rates doesn't feel like that's a good thing. Core came in 4.9 versus 4.9. And then month over month, 0.4 versus 0.5. Wow. Year over year, 6.5, which is up from 5.7 last month. Goodness gracious. Did markets actually dump on PPI? Let's look at SPY. SPY. Yeah, we actually did dump. Okay, so we were at 730, and then there's those two red candles. We dumped to 726. Now we're at 728. Yeah, so we were actually up a lot more, as I'm seeing right now. Yeah, Robinhood was pushing 89. Now it went to 86. Now it's at 87. All right, so we did get a little bit of a dump as soon as PPI came out. We're getting a little recovery right here, but that PPI is kind of bad. The jobless claims were okay. The ECB raising rate stuff, it'll take time for that to be factored in. The PPI was not good, dude. 6.5. CPI was yesterday, 4.2 versus 4.2 expected. 6.5 versus 6.4 is what we had on PPI. Jobless claims did come in higher than expectation, but it was only by 4,000. So I don't know if it was enough to get the street to react. But PPI itself was bad. Okay, so to summarize the macro data, jobless claims a little bit hotter than expected. PPI definitely hotter than expected. The ECB raising rates by 25 basis points, and then Trump coming out tonight saying that we are officially going to be attacking Iran again and trying to take Karg Island. All of that stuff together, and markets are still holding green, and oil is still holding 90, which just shows you how resilient this little bounce from yesterday has been. Now, obviously, when the market opens, we'll see if that can hold through. But it's almost like we've gone down so much that people want to have some sympathy of a move higher. It's just, that's a lot of bad news stacking on each other going into the market open. Okay, let's talk about AI. We have some pretty big AI headlines that we've got to talk about. Some pretty freaking big AI headlines. One of them dropped last night, and as soon it was during the middle of the Knicks game, so I didn't pay too much attention to it. But as I woke up in the morning and started thinking about it, I was like, hold on, this is like actually kind of important. We'll do the red or green poll right here as well in the chat. Okay, OpenAI. Yeah, it was a pretty big piece of news. OpenAI is considering drastic price cuts, anticipating war for users from Anthropic. OpenAI is considering drastically lowering the prices it charges users as it seeks to win customers from its rival Anthropic. The company is weighing significant cuts to what it charges for tokens, the unit of measurement artificial intelligence firms use to bill for their products, according to people familiar with the matter. The move would be in anticipation of similar cuts the company expects from Anthropic. Sam Altman said this at a conference. I think we'll have a lot of ways we can help people get more value for less spend. Drastic price cuts could potentially erode the profit margins of both companies, which already lose billions of dollars because of the enormous cost for computing resources needed for AI systems to process queries and carry out tasks. Okay. Someone explain to me how this isn't unbelievably and intrinsically bearish for the model companies. They can't afford any of their compute, because it's really expensive to buy compute and set up data centers and do all that stuff. Now, they can't assume that these prices will continue to last or that customers will be willing to pay these prices. We've seen multiple examples over the past few weeks, whether it's Microsoft, Uber, et cetera, coming out saying, hey, the cost of tokens is more than the cost of like a really good engineer. Like, it's not really making sense. It's not empowering our engineers. We're not really seeing the ROI. We're just spending a lot of tokens for the hell of spending tokens. We're not going to do this. We're going to take down our token budget and make it something that's more reasonable. If you've reduced the costs for your only product, which is token generation, and you can't afford in the words of Jensen, $100 billion per gigawatt that it's going to take to develop a data center in the future. Right now, I think it's around like 30 to 40 billion. How are you ever going to be profitable? And how are you going to have sustainable growth long-term that is even, forget GAAP net income profitable, adjusted EBITDA profitable? Like, where are your gross margins going to be coming from if you slash token costs by, I would imagine you have to do it by at least 40, 50% to get these enterprises to feel it's reasonable to continue paying for these token costs versus just saying, we'll let the human do it and it's just cheaper, so we'll figure out and we'll see if the productivity benefit actually comes in the long term. Now, the only pushback I think you can have to this is by saying, well, Jevons paradox. If if an average cost per token, I'm just making this up, is like, I don't know, 50 cents per 100,000 tokens, and it goes down to like 10 cents. You're going to have so much token usage because of that 5x decrease in costs that it's going to make up for the trillions of dollars that Anthropic and OpenAI are spending on compute. And I don't know if I believe that fully. I believe the broader argument of Jevons paradox that, when something gets cheaper, more people will use it. I don't know if that's going to be profitable anytime soon. Like, OpenAI and Anthropic would have to get like orders of magnitude of levels of people using their products across the entire world in order to just break even to be able to pay for the compute if they were to slash the prices that significantly. And this is a signal that Opus 4.8 had as well when it came out a week ago, that they didn't raise prices on Opus 4.8 because they could tell that some of their customers in terms of Anthropic were starting to push back against it. And now you got Sam Altman saying, by the way, Dario's going to probably cut a lot of his costs soon. And so we're going to do the same. And that's going to be our way to kind of resolve this broader issue around what's going on with tokenomics. It feels like it's a commodity. It's kind of what, Carp has been saying for a while, which is that, look, these products are incredibly special and valuable and important when it comes to the orchestration of how we engage in a new world driven by artificial intelligence. But the companies spending these billions of dollars on CapEx to build them, if they all do the same thing, whether they're the Chinese models, Anthropic, OpenAI, Meta, then really where is the value in them? Because at the end of the day, they're going to just do what everyone wants them to do, which is why, there's no moat, there's no lock-in effect, there's no important necessity to have them. In fact, Citadel came out yesterday, and Citadel said, this shit makes no sense. Citadel, we have argued for some time that agentic and complex workflows delivered by frontier models will be expensive to run, constrained by physical bottlenecks, and vulnerable to unrealistic expectations of frictionless deployment costs. That judgment now looks less contrarian than it did when we first set it out in February. Amazon has removed its token leaderboard. Microsoft has canceled Claude Code subscriptions, and there have been multiple reports of unexpectedly large token bills. The salient point is that even the most powerful technologies must pass through the prosaic discipline of cost curves, capacity constraints, and marginal returns. Adoption is therefore becoming less about what frontier models can do in principle and more about the price and scarcity of the inputs required to make AI operational at scale. Compute power, coding, memory bandwidth, and inference budgets are real and blinding constraints. I mean, even think about something like the memory names, Micron. Does Micron get away with 85% gross margins in a world in which customers are pushing back and saying, we are not going to be paying for this compute, or we're not going to be paying for these tokens? At what point do the hyperscalers tell Micron, we're not going to be paying these types of margins for your memory because we have to lower our prices for token generation, and we have to lower our outlook of demand, because until we lower the outlook for the outlook for prices for token generation, we can't assume the trajectory of demand is going to be so monumental that we're willing to just pay whatever the hell you guys want us to pay to be able to fuel your profit margins. And so I think this story last night was one of the biggest stories we've seen in 2026, to be honest, when it comes to AI. This story and the Google 80 billion dilution story, I think were massive. And it even you start questioning the Google story as well, because you're like, hold on. Google is not, well, Google's building Gemini, so technically they are building a frontier model, but at its core, they care more about cloud usage, cloud workloads, but all of that comes back to token generation. And so you would argue that if customers start rebelling against paying all these token costs, AI workloads on the cloud, which is what Google, Microsoft, and Amazon have built their valuations on, that would start to go down, or at least not start to grow as aggressively. Now, again, I think they would fight back and try to do as much as they can to subsidize those costs to get those growth curves to continue to persist. But it all comes back down to what is the cost for the end model, and is Google, is Microsoft, is Openai, is Amazon ready to let any model be interpreted through the entire stack, including the cheapest ones from China, in order to make sure that customers are happy using the token generation vehicles on top of the cloud workloads, because that's how Google, Amazon, Microsoft make their money. But it absolutely affects them at the end of the day if OpenAI and Anthropic, choose to do that down. So I don't know. This is very interesting to me, and I don't think it's necessarily a bear case at all. I don't think you completely say the AI trade is over from this. I think that's taking it a little bit too far. But I think you start to look at a different perspective, which is that what's happening in the real world. And in the real world, if customers are saying we are not willing to pay these prices, especially, this is what Carp has been saying for a while. So if you're not seeing an ROI from it, if you're not being treated like someone that actually has a problem that can be resolved in a meaningful way, if enterprises are not willing, if forward deployed engineers don't actually care about you, if they're not actually willing to work with you, then all you are to them is someone to generate tokens. It's parasitic. And if that's the case, and then you have all these general constraints around energy and memory and photonics and all this stuff, like all those constraints only make here's the thing, the supply chain bottleneck trade, in my opinion, based on this news last night, has some cracks in it. And the crack is that if the tokens themselves are going to start to go down in price, unless the volume of those tokens increases by an order of magnitude that makes it easy for OpenAI and Anthropic to stomach the subsidized costs, then the supply chain bottlenecks don't become bottlenecks anymore, because there's just not enough demand for it. Now, if there's massive demand, then the bottlenecks continue to persist, but the margins on the bottlenecks also have to go down, because the cost of the end product that's coming out from the bottlenecks has gone down. Like, I feel like this is kind of obvious. Like, if you're charging 10 cents or let's say $1 for a million tokens, and that dollar turns into 20 cents or 50 cents, then the prices you're willing to pay to get the compute for those tokens has to come down, which means you have to go back to your suppliers and vendors saying, hey, this is what we were paying you to get all this compute. This is what our compute is worth today. Until we see this compute being worth more, we cannot pay you the prices that we're paying you. And we're going to go to a different vendor who's willing to accept terms at a different price, which obviously I think might affect, some parts of these different trades. So this is weird, dude. This story last night, there's a lot to analyze in it. I'm trying to find the bullish perspective. The only bullish perspective I find is that, it's just going to increase the amount of tokens that are being used. But again, realistically, increasing token usage that's not even the solution. Like, you have to have actual outcomes from the token usage. Like, a company just increasing their token usage without actually growing their margins, their top line revenues, their bottom line profit. How is that increasing token usage is going to do nothing for them? And at some point, they're going to not use as many tokens, even if it's cheaper, if it's not actually resulting in a meaningful outcome, which is where we have to ask ourselves the question, are OpenAI and Anthropic actually in the business of providing those outcomes? And if they're not, is there really value in the enterprise from a lot of these models? So I think it's something to think about. It's something to go deeper on. I don't think it's slowing down anytime soon. But if the cost reductions are happening, then I do think it affects somewhat of this AI trade to an extent. And we just have to see if that ends up, meaningfully getting priced in. Rushi says, the thing is, people are just using most powerful models for everything. That is not the way. You don't arm a security guard with a bazooka. Yeah, that's fair. I think the diversification of how these tokens are being generated is really important. And obviously there's different costs across, different geographies and different locations. But it's fun, dude. It's not making sense, right? Like, I'm trying to find the flaw in the logic that if OpenAI is decreasing their costs, how can they afford to pay, or decreasing their value of their tokens? How can they afford to pay the costs that they're incurring unless that also proportionally goes down? You can't pay $1 trillion for compute and then get $300 billion of value from it with tokens. And that's their business, generating tokens. That's how OpenAI makes money. Unless OpenAI or Anthropic come up with a different business model. The reason Anthropic is getting this valuation is because they're so ingrained in the enterprise and they have so much lock-in effect that it's working. But if that lock-in effect leads to a decrease substantially in prices and not an increase substantially in usage, then there's a mismatch between how much they're paying, how much they're burning every month, and then ultimately what their gross margins are going to become. It's like Apple saying we're going to lower the price of our iPhones, from $1,000 to, which has 60% margins, to $700, which would have 20% margins. And you would assume, okay, more people are just going to buy iPhones, will make up the difference. But what if more people don't buy iPhones? So I think there's more to this story. It's not fake news because Sam Altman was literally quoted as giving this quote to the Wall Street Journal yesterday at a conference where he explicitly said that this is what we're going to have to do. He said, I think we'll have a lot of ways to help people get more value for less spend. And he also says, I expect Anthropic to be doing the same soon. So I think he's recognizing that the entire cost of tokens is going to collapse along, and every model company is going to have to adapt to it. But, what does that mean for the AI trade? I'm left wondering, this news came out when I was watching the Knicks game last night. So I was like, this is big news, but then the Knicks were getting this massive, once in a lifetime comeback. So I didn't have time to think about it. I woke up this morning and I'm like, it's not good. I don't know in what world is it good. And I don't know in what world does it make sense. And it affects all the neo clouds as well. So I think there's a lot to dive into and to see how exactly is this going to play out? What is going to happen here? And, where is this necessarily going to come through? Especially because, even if growth continues on some of the model companies, if the cost per tokens goes down, then revenue growth theoretically slows down in the short term until they get the volume to back it up. But, that volume might end up taking more time than expected. Now, Dario is pretty bullish on AI in general, but he's also a bit scared of AI. Here's what he had to say to defend his doomeristic narratives in the face of everything that's happening with AI.
I know you've said you're trying to warn people, but that, Jensen Huang said you're conflating tasks with jobs. Other folks have said this, it's sort of doom marketing that benefits Anthropic.
So I want to be really clear and push back hard against this. In every interview, I talk about the possible ways to address these risks, from tax and macroeconomic policy to what the new jobs are. In the adolescence of technology, I have 5 pages where I lay out the difference between tasks and jobs, why this time is different than other times. But social media, which I detest as a category, people have these 3-second clips from a year ago. I've written much more carefully about these things where I talk about the risks. So these are the idea that this is cheap marketing is itself cheap marketing. I think it's part of the disease of Silicon Valley. It's been caught up in this social media world of 3 seconds. And so my message is just definitely not doom is coming. My message is like, this is something, you know, that we should see coming, that we're worried about, and that we need to actually respond to positively.
So I think that was Dario trying to clear up a lot of some of the doomerism that he's been he's been talking about over the past couple of years now. A lot of different insights from that interview in terms of what he was saying. Nothing too crazy from things that we didn't know already. But look, Anthropic is the leading edge company. That model is going to go public pretty soon. OpenAI has already filed for IPO. That's going to go public pretty soon as well. It goes back to the question, right? Forget even the doomerism stuff. How do you look at their public valuations if their token costs go down dramatically? Like, it's one of those things where I think lots of parts of the AI trade could be affected, but lots of parts of the AI trade could be stable and not affected. But OpenAI and Anthropic themselves, if they're going to be kind of doing this Uber model of subsidizing costs for years to be able to gain market share, their financials are going to look horrible. Like, their financials are not even going to look like they make sense. If we think SpaceX financials are ugly, I would imagine those financials are not going to be pretty either, especially if they decrease costs after they go public, because then, you know, you're immediately going to see a revenue decline unless they have the volume to back it up, which maybe they will. So it's one of those things where I know they're trying to force these massive IPOs onto the market right now because they need liquidity and they need the money to buy the compute. But I think the slashing of token costs and model costs is definitely going to play a role. Now, it might be actually bullish for software because ServiceNow doesn't give a shit if the cost per token goes down. Palantir doesn't care. Salesforce doesn't care. I mean, it's actually hilarious. Like, the software names, I think, would be the biggest beneficiary if the token costs go down, because that means theoretically more usage would be easier for enterprises. And if enterprises are using the foundation models through a Palantir ontology or through the ServiceNow platform or whatever it may be, then that should increase the usage, which should be good for the software companies. And if the software companies are intent on trying to deliver actual valuable business outcomes, then the LLM is literally just a commodity. It's just a tool. It's, you know, one could argue it's no different than the keyboard of the laptop that you're working on. You can get any type of keyboard as long as the keyboard works to be able to get to the end result. I wonder what it means for the foundation model companies that are spending trillions of dollars on this shit, growing like crazy, but might not be able to produce any type of meaningful profit unless they have some significant lock-in effect with the enterprise that, you know, allows them to have a better revenue share in terms of how the business plays out. So I don't know. I thought this was incredibly bearish last night for OpenAI and Anthropic. And, you know, it could have been part of the reason why Oracle got hit as well. So let's talk about Oracle earnings. Great earnings, beat on revenue, beat on EPS, increased their fiscal year guide to 29%. The problem is they increased CapEx from 70 billion to 90 billion. So they're spending 20 billion more in CapEx, and they're going to be diluting by 40 billion in debt and equity. That, and I think Oracle's leverage to OpenAI, and then you see the OpenAI news last night. OpenAI has pledged $300 billion to Oracle for compute costs. Oracle building out Stargate and all these other different facilities and data centers for OpenAI. Well, OpenAI is not growing as fast as Anthropic, and now OpenAI is thinking of getting their costs to come down. What happens if Sam Altman goes up to Oracle and says, yeah, this 300 billion, it's not making sense right now. We're going to have to reduce it. I mean, that would significantly affect Oracle's RPO. Now, Oracle's RPO jumped from 553 billion to 638 billion. So massive increase in the RPO, up 85 billion Q over Q. Half of that still is OpenAI. So you would need a lot of those contracts to remain structured, intact, and not get hit. But I think that news last night kind of just took sentiment on any stock associated with OpenAI to the downside. And then the fact that they're raising another 40 billion, even Microsoft, right? This is another heavy owner of OpenAI, 27%. They're down 395 pre-markets. I think the market is just feeling a little sour on that name. But Oracle raising another 40 billion, yeah, I don't know if the market loves that. I don't know if the market loves that right now. So I thought it was a good quarter, though. I mean, their earnings were great. The call was great. I mean, like, there was nothing fundamentally wrong. Their software revenue was not the best, but nonetheless, their, you know, data center revenue, networking revenue was so strong, and the increase of guidance was great. It's just they're levering up heavily, and they're not Google that is able to do this all with cash flows. You know, Oracle has negative cash flows now. It's just probably something that I think the market didn't love to necessarily see. I think many corporations think they can build cloud code on their own and their employees will have to suffer from that. Yeah, I mean, look, I think most organizations have recognized the value of Claude Code and Codex and all this stuff, and they're seeing how important it is. But if you actually talk to some people that are using these products all the time, like you start to realize, A, they don't see a difference between both of them. A lot of, many of them are the same. B, they're using multiple models. And those models are, quite frankly, a lot cheaper and don't have the same type of rate limits for something that's 80% as good as the actual core product. And then C, you have these Chinese models coming online that you can host locally on US servers that also allow a much easier way to be able to run compute costs without having to worry as deeply about how much it's actually going to cost. And that, I think, is something that, it's something we can't necessarily ignore. This was a chart right here from Citadel yesterday that it was also super important to back this up with data. There's a recent token expenditure index declines, which is reflecting a shift to cheaper models. This is why the whole Google SpaceX deal is absolute nonsense. Absolute nonsense. Google, if token costs are going down and enterprises across the world are literally spending less on tokens, either through usage or just them protesting and saying, we're not going to spend this much money so that the companies themselves have to reduce their costs, there is no way in hell Google is going to pay 300% the average price to rent a GB300 from SpaceX for the next few years. Like, and if they do that, then, I mean, maybe Google is having such unbelievable, unprecedented demand that Google's like, dude, the way we're monetizing this AI, we were willing to pay 5x. We just got to get the compute because we have so much demand. And if that's the case, then I guess we're going to see it in the earnings, because we didn't hear that from Microsoft. We didn't hear that from Amazon. We don't have Meta going out of their way to spend 3x. And usually all these Max 7s kind of work together. You can kind of tell what they're doing all at once. They're in the same prisoner's dilemma. So if Google's willing to pay 3x the cost, why isn't Microsoft willing to pay 3x the cost? Just GCP that much better than Azure, where it's getting that? Like, are they just that much better at marketing GCP over Azure? Like, that doesn't make sense. So you would imagine that entire deal is fugazi if token costs are actually going down. And eventually Elon's going to have to actually give Google a deal by decreasing the cost it takes to rent the GB300, or Google's just going to get out of that deal, which they have in their agreements that they're able to get out of that deal. I don't know. It's weird. It's very weird. And even if you think there's not a big difference between the models, eventually all the models will become rather similar, right? Every time we have a new model, it's like, okay, that's good for now, but at what point does it get similar? So again, I don't think this is bearish the broader AI trade. I think this makes you question the validity of the models, the value that they bring to the stack as a company in and of themselves, and then some of the corresponding features that are involved in servicing the models. It doesn't mean it's bearish AI. It doesn't mean AI is, if anything, it's bullish AI, because it means there's going to be so much more usage. But the economics, the unit economics of many of these companies associated either with deploying the models or helping to build the models, I think that came into question last night with what Sam Altman said. And now we're just going to have to see if the market ends up interpreting it as bullish or bearish over the coming weeks. But that was the big deal of last night. It was pretty ugly over the past couple of days. Yesterday was not fun. Tuesday was not fun. Most of you guys in the chat right here, I believe, said red on the poll. A little bit of a sympathy bounce, but we got to see. PPI data was not good today. Trump says we're attacking Iran. That's not good today. You got generally a lot of crappy news, and then you have the Openai big story last night. So we're going to see now how the market responds to it. Here we go. Thursday, June 11th. Thank everybody for being here. 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. S&P 728.33. We are officially below the 730s. And I wonder if we are going to be normalizing below the 730s or if we're going to be staying there. But 728.43, that's up 0.41%, up a little bit from yesterday. Robinhood, 88.07. Robinhood has been incredibly resilient in the midst of the sell-off. There is something going on with Hood, folks. There is something going on. One of the directors buying $50 million worth of shares. The guy has plenty of shares. Why is he buying $50 million more worth of shares in the past week? And then why is Robinhood not collapsing like every other high beta growth stock? Something is going on. I don't know what it is, but there's got to be something deeper for why the street's keeping Robinhood elevated right here in the midst of all these names getting hit. Robinhood, theoretically, you would expect it to be like $70, given how bad it's fallen, or given how bad the S&P and how bad Bitcoin has fallen. So there's something different going on. Don't know what it is, but Robinhood's holding up. Cerebras, that's down. Corning, that's up a little bit. NVIDIA, 202. That fell below 200 yesterday, 198. That's holding on to a little bit of that green. Is Meta going off a cliff? Meta, oh my goodness. 562 on Mr. Meta. Talk about a collapse. Microsoft, 393. Collapse. Oracle, 177. Collapse. And ServiceNow, why not? 103. Collapse. Where's the Googs? We've got to be at least 358, 353. We are $3 away from Warren Buffett's accumulation price in the private placement. Shopify down 2%. Uber down 1.9. Okay, so all of them are falling as soon as the market opens, which is the opposite from yesterday. T1 Energy down 1.2. Rocket Lab holding on to a little bit of green at 105. Yeah, this is disgusting. This is across the board disgusting. I don't understand how Nokia and BlackBerry are green when all these stock. I mean, like any stock that's green right here with some of the Mag 7 price action we're seeing is pretty incredible, given how ugly that is. Nebius, that's down 209. Cerebras, that's down 1%. NVIDIA got some red candles right there, 202 to 201. Intel, 112. You got the Qs below 700. Amazon, 237. Netflix, potentially losing 80. Let's see if we end up getting into the 70, 75 is when that gets a little more interesting in terms of historic valuation. $80 right now. 72 is where it bounced last time after the Warner Brothers deal. Fuel Cell Energy, that's up 1.3%. Nubank, that's down 0.29%. Broadcom, it's up $1. So I guess it's holding on to some green. Micron and 903. I mean, you got to say Micron's pretty freaking resilient to even be holding the 900s in the midst of how ugly this sell-off has been. But it is holding the 900s. Robinhood as well, holding the 88s. Meta, there's no headline today to be taking Meta down even more. At least I don't see a headline. But obviously the street's not happy about it right now. Oh, wow. Dell files for debt shell offering. Dude, Dell is kind of taking a big beating. 490 to 375, fell to 357 yesterday, and now they're diluting. We don't have the exact amount that they're diluting by, but they are indeed diluting. Rocket Lab gets you a little bit of green, 108.53. Again, you have SpaceX going public tomorrow. I'll be live throughout the IPO, so that also could be very important, obviously, for the space trade. ASTS, is that green? ASTS 90, that's a little green as well. So space holding on today, I think, because of that SpaceX IPO coming up tomorrow. And then, that's either going to be a sell the news or it's going to be something that you run into. But everything else just getting destroyed. Oracle, destroyed, 12% down. ServiceNow, destroyed, down 3%. The fact that the S&P is green is pretty incredible right here. Google and Microsoft getting absolutely nuked. Microsoft 470 last week to 391. Let's see if it holds even the 390s right here. Cracker Barrel, that's down 2%. SoFi, that's down 0.5% as well. As you're seeing, that's going down. Is Virgin Galactic up? Virgin Galactic is up 6%. So I guess that's a little green. CoreWeave, that's down 4.5%. Why? Yeah, see, Marvell being green doesn't really make sense here. And this happened yesterday as well. Some of those names held up their green in the midst of the red, and then by 2:30, 3 p.m., all of them ended up getting destroyed. I mean, Marvell ended up going to 242 yesterday. At some point, they all just broke because everything was falling. And you're seeing a lot of things fall right here, but not everything yet. AppLovin, this was almost at 600 last week, now at 474. That one is down. AMD, 465. That one's holding up. So it's kind of being selective right here in terms of which names are getting the bid, which names are not. Oracle, again, getting hit pretty hard. Micron holding on to it. Nebius, 208. Nebius bottomed at 200.88 last night. So it didn't go below 200 psychologically. But obviously, that one is still getting hit. Netflix, we are at 80.67. That's down. Credo, this was up 6% yesterday as well. So Credo's been holding on. And that one's not been getting hit. Dell files to sell 5-year, 7-year, and 10-year notes. Wow. 5-year, 7-year, and 10-year notes. That is a lot. A lot of freaking dilution across the board. Nubank, that's down 0.5%. Grab, that's down 2%. All your international companies are getting hit. I mean, Trump saying he's going to take over Carg Island doesn't really help the oil narrative at all. And so every company, Sea Limited, Mercado Libre, they're all getting hit based on, Mercado Libre. Is that 52-week lows? I think that's 52-week lows, or it's very close to it, 1561. I mean, the oil markets aren't showing oil futures are up, but if Trump says he's going to take Carg Island, I would imagine, unless we actually take over all the oil, it's going to definitely create some volatility in oil prices, which is just not good for any of the international companies right now. SMCI getting a little bounce after it fell about 25% yesterday. Tesla 381, that goes red also as that continues to get hit. Fear and greed is not showing greed. It's showing more fear than not. So theoretically, when we get to, we are basically at extreme fear. We're at 27, another couple points. We're at extreme fear. Historically, that's worked as a buying opportunity. It's just, I wonder if, after this historic run, is that necessarily extreme fear? Because a lot of these names are still up a lot from when they started running. Intel, that's up 9. Intel catching a bid right there. There might be an Intel headline that just came out. Intel making a move. Is ASML moving as well? Intel did get an upgrade today from Bank of America. I think that might be causing it. 135. They upgraded them. Okay, a little bit of delayed reaction from the market open, but ASML, that's also up 3.6% as those agreed. Yeah, and they're increasing their price target based on CPU TAM increases up until 2030. Again, if OpenAI decreases the cost for their tokens, which was the big story from last night, that's going to lead to theoretically a lot of more agentic inference, which will lead to a lot of more CPUs. So it's not necessarily bearish for the picks and shovels of the AI build out, which is what keeps the CapEx story alive. But, it is theoretically bearish for OpenAI if they don't have the unit economics to monetize. Because if Intel is not going to decrease their margins and OpenAI is going to still have to pay whatever they're paying for a CPU, or NVIDIA is not going to decrease their margins, right? And Jensen has talked about this. Jensen has says the demand for compute will 1 million X, not even 1,000X, 100,000X, a million X. So at that point, you have to believe that there's going to be just so much demand that the gross margin structure of many of these companies will be stable, even if I think the foundation model companies will want to negotiate. And that might allow them to hold on. S&P lows of the day, 726.90. 726.90 at the moment. Webull 625, that's up 2%. AAOI, that is down. There was a bearish photonics report that came out last night by one of the sell sides that said the TAM for that industry is not going to increase the way that the Goldman report assumed it was going to increase. And that is, theoretically bearish for Lumentum, Coherent, et cetera. And some of the smaller plays like an AAOI that, don't have the type of moat that some of these other photonics providers have. So you just have a lot more researcher notes coming out kind of questioning a lot of the validity of a variety of different parts of the AI trade by more reputable institutions, not just Michael Burry. And I think it's getting people to question certain elements of it. Also, I think to an extent, people are just exhausted that we went up straight vertically in a line for so long. And so I guess we're consolidating. And it doesn't help that you have a massive IPO coming up soon where people need liquidity for it. It's just all of that's happening kind of all at once. NVIDIA right there, 201. 201 on NVIDIA. Meta is going downtown. Going downtown. 562 on Mr. Meta. Yeah, I'm surprised that even some of these semis are holding green. You're starting to see red candles. Wow, Google, are we losing 350? In that case, you can get it cheaper than what Berkshire just paid for it. There it is, $349. You can officially buy Google cheaper than what the smartest investor on the planet agreed to pay for Google in that private placement. It's kind of funny how the market works, dude. It's funny how the market works. Nebius 206. Micron loses 900. S&P very close to going red. You got $1 here before this thing ends up going red. NVIDIA 201. Bloom Energy. This one's up a little bit, I think, on a sympathy bounce. This one got smacked yesterday. Now, Bloom is a pretty expensive stock. Still trades at 162 times. But, you know, the narrative for them with Oracle and energy and fuel cell technology was really good a month ago. I think that narrative is just kind of faded, even if the numbers haven't necessarily faded. SoFi right there, 1574. That's also getting hit. This is interesting. This is interesting. Oil is not really spiking up the way you would think it would spike up. Fear and greed is that extreme. Oil's actually down, dude. We're at 89 now. We just lost 90. Like, either the United States has a lot of oil that they just keep pumping into the supply, or the markets really don't believe in any of this Iran war stuff anymore. Because a headline like this a month ago, even a couple weeks ago, would send oil to 95, 96 instantly. And so I guess that's the bright side in the midst of the market going down, which is that oil is not spiking to the moon. But it's still obviously not affecting sentiment on the market right here. 726.59 on the S&P. Oil traders don't want to get wrecked by Trump's fake headlines like when it was at 120. That is fair. I think that's a good point. Amit, do you think this Google SpaceX news is just a grift to bring down the multiple for the IPO? Yes, 100%. Look, Sundar is smart. Sundar owns a $120 billion stake in SpaceX. He knows that if he gives SpaceX a really good contract, that would help support the valuation on the IPO. It's just, look, maybe I'm wrong and Google is facing such unbelievable amounts of demand that they need to pay 300% the average price of a GB300 to grow faster. And even if they do, what is the margin on that? Like if you're paying 3x the average rental price for a GB300 and you're servicing the demand, are you charging your customers 3x the amount? Because if you're not, how are you even breaking even on that? Like the whole deal made no sense to me. The whole deal felt like it was Google trying to pump the IPO, which they should do. They're a shareholder. Like that's their job. But if we're being realistic about it, and Elon doesn't even want to be a neocloud. Elon said to people, "Hey, this Anthropic deal is short term. I don't want to, I'm not servicing them the compute for the next 5 years." So people are like, "Oh, well, Elon's going to make $20 billion a year from Anthropic." It's like Elon himself doesn't even want to service Anthropic for a long time. So his intention is not to keep this thing going. Now, Anthropic's allowed to lose money, so they could pay higher compute costs because who cares if they lose money? But Google can't really lose money. They have shareholders that need to see a profit, right? The whole thing is just weird. And then, I think it's a crappy time for SpaceX to go public because you have such bad intraday movement over the past couple of days. I think the IPO will be successful, but how long does it hold on to that valuation is the bigger question, not if it actually gets, the pop as soon as the company goes live. Zeta getting hit. SaaS summer turned into SaaS apocalypse again as the SaaS names IGV below 90 continue to get hit. Continue to get hit. The VIX is, dude, this is so weird. The VIX is down 3% today. And you've got these Mag 7s just getting destroyed. I mean, I guess oil's down as well, which is helping the VIX go down, but still, some of these narratives are just like very conflicting. Microsoft loses 390. Google definitively loses 350. ServiceNow looks like it wants to lose 100. Micron's somehow holding on to 900. Oracle loses 177. This one down 12% right here. Robinhood officially goes red on the day. Palantir, we got support at 120, but that's it, folks. Below 120 is going to get kind of ugly. So we really got to hold on to that 120 level. 128.75. That's red. AMD, that was holding green. AMD is still holding green. AMD and Micron, got to give them some credit right here. They're holding on to it. SK Hynix plans to triple wafer capacity by 2034. Driven entirely by AI memory demand. Capacity doubles within 5 years, triples by 2034. Okay, so that's bullish memory supply, but that's still going to be a long time until that hits the books. Wow, Wix, that's down another 5% right here. 43.80. Akamai, that was at 150. Now it's at 1%. Fastly down 3%. That robotics ETF down 7%. But then you have Nokia and BlackBerry that are green. Like some of these names should not be green in the midst of this, but they are, which either means that it's not as bad today and we're going to get a little bit of rebound, or these names are just taking a little bit longer to fall off. Qualcomm 258 to 195. has not been able to do anything. Microsoft 389. UAE and Iran said to have met face-to-face to ease tensions. Okay. We know that the Qatari delegation went to Tehran last night as well to talk to them. Top Trump officials have viewed Karg Island capture as endgame. Plans for U.S. military to try and capture Karg Island have been drawn up for months, but continuously shelved because the operation was considered too risky, a senior Pentagon official and 2 administration officials told CNN. The view inside the White House and Pentagon is that taking Karg Island or wiping out the island's energy infrastructure would effectively bankrupt Iran and diminish its capabilities to the point of it being unable to continue the war. Dude, they're really going for it. They are really thinking about doing this. I mean, for all the people that said the deal would never happen and that the U.S. would actually go for the end game, it looks like you guys are going to be right. I was wrong on it. I thought they would actually get a deal diplomatically and negotiate. It doesn't look like that's happening. I mean, if they're actually thinking of going for Karg Island, that's going to be a hell of a military operation, and that's not going to be done in a couple weeks or a couple days. I mean, that's going to be a pretty aggressive maneuver. They're going to have to, I mean, it's going to be a lot of people are going to die when that happens. I mean, the Iranians aren't just going to let them take it. They're going to fight for it. And I don't know if the Iranians are going to have the ability to actually beat the United States. I mean, that's a war. That's a full-on war. Now, that would bring a lot of oil to the United States, which, okay, sure, but at what cost? What does that mean for the region? How long is that going to take? And then, does that lead to the sort of regime change that Trump has been talking about Iran in terms of once they bankrupt the entire country, they get to control the country? And it's 92 million people in that country, man. There's a lot of more variables to see how that plays out. Carter Libre down another 2%. AMD still holding up as well. I mean, again, if you were here in the beginning of the market open, Trump said on Fox News specifically that he officially is getting ready to capture Karg Island. So it's not like this is a rumor. But I wonder, I think also what they're trying to do is get so aggressive about this and like act like they're going to do it. And they want to see in that final moment, will the Iranian delegation come to them and be like, all right, whatever, let's make a deal. They get to the point where like the guns are pointed, they are ready to press the button. And then finally the Iranians call up and say, all right, we don't actually want to go through all this. Let's make a deal. Like, is that what they're really trying to do here? Or are they just saying, screw it, no, we're going to go for it? Because if that's the case, I mean, it would definitely feel like this is going to escalate into a longer term situation. S&P right there, a little bit of a bounce, 729. So you got somewhat of a bounce right there. Robinhood as well, a little bit of a bounce. Microsoft still 390. Palantir still 129. Amazon 237. We definitely bounced from the very lows a couple minutes ago, 235 to 237 on Amazon. ASML and Intel having a great day. ASML, wow, 1800 as that's green. Where's BTC? Bitcoin 63. Yeah, this is very interesting price action. I mean, you got a lot of bearish stuff. Some parts of the market are red. A lot of other parts are flipping green, and some parts just do not care. Corning, that's green. Nvidia, that's green. CrowdStrike is green. Kratos green. Where is gold? Gold is, wow, gold's almost below 4,000, folks. 4,085 right there. It's actually down. You would think that would be up with this geopolitical stuff. Silver has been a disaster, 64. Had a little bit of a pump a week ago. Bloom, that's getting a little bit of a pump, 239 to 245. Nebius, 208 to 213. I mean, a lot of these names moving back up. Oracle's not moving. Google's not moving. ServiceNow's not moving, but your space names are moving. Redwire, that's also up as well. As that is green. I would expect the space names to pump going into tomorrow. I mean, tomorrow is going to be a big day for them. What do we think it opens at? Put your price target. What do you think it opens at? I'm going 180 to 190. That's my price target for where we get SpaceX tomorrow. Maybe it's lower than that, but I think 180 to 190 is where it gets through. Maybe it goes to 250 and just blows every expectation. But we're going to have to see. A lot of you guys saying 200. I mean, if ad opens up at 200, that's going to be crazy. 200, what market cap is it at 200? That would basically be, so let's do this times, that would be 2.3 trillion, roundabout, 2.3 trillion, 2.3 to 2.4 trillion, which would still be a pretty hefty premium. SPY 730 goes green. This has to be a dead cat balance. Dude, yesterday was filled with, I mean, yesterday, if you were looking at the charts, yesterday was like big flush out, big move up, flush out again. And then for the next 3 hours, it was up and down, up and down, up and down until basically the last 30 minutes of the day, everything got dumped. So yesterday was incredibly just back and forth, back and forth. It ended up being a pretty red day, but I mean, you had a lot of moments where some of these names were not willing to fully go red. Google back above 350, and I kind of think some of that is happening today. It's just happening way earlier than what happened at yesterday. Microsoft 392. I feel like Microsoft's a buy here, man. I feel like Microsoft is a buy. I feel like it has to be, dude. I feel like it has to be. I mean, like 470 to 392. The only problem is if these guys announce an equity raise, I don't see how that stock doesn't go down. That stock probably takes a little bit more of a haircut. And then you got to ask yourself, why wouldn't they announce an equity raise? If Google did it, they should be able to do it as well. Credo, 10% as well, as that's still making a move. They don't have to raise equity. They have cash flow. No, but they've used a lot of their cash flow. But that's kind of the entire story with the Max 7s, right? Google's used all of it. Amazon's literally gone to negative free cash flow. I don't know if Microsoft has officially gone negative free cash flow, but it's less about using their cash flow. It's more about saying, like, hey, if Google can raise 80 billion, why can't we do that? Like, Google shouldn't be the only one that gets to get away with that, right? Marvell, 4.7% as well. 200-week moving average on Microsoft is in the 380s. Dude, 380s is psychologically the level I've been waiting for as well. Now, when it was at 470, I felt like, okay, it ran away. It was just not going to get. The fact that it's actually come down this much kind of makes me feel like it's not worth being that greedy for another $10 and taking the shot here. But man, just a massive reversal. Amazon as well, 230. I mean, who thought after Amazon was basically normalizing 265 to 270 for what, a month and a half, that it'd be right back below 240? Like, I kind of thought that was done with. I thought maybe 255 again. You could just completely came right back down. Yeah, and Intel's still up 2% right here. 117.60. Okay, so we're kind of flipping here. I don't see any headline to flip. The Q's right there, 704. That's also making your move. As that is green. Is Keel going up? Keel making a little bit of move right here again. Same story with Keel. They need to get a deal. That is what re-rates them. Until then, you know, it's not really going to matter. And I think their deal will be with Amazon, but you know, we got to see if that actually happens. Microsoft still 390. Micron at 917. Micron again been incredibly resilient. The space names, it's obvious that they're pumping. I mean, like, if they weren't pumping, it'd be concerning for the SpaceX IPO. So I don't even think that's something that's like different than what we would thought would happen. The question is going to be, do they sell the news tomorrow? Or do they pump into SpaceX? Like, if SpaceX opens up at 220, is Rocket Lab going back to 130? You know, like, does it have that type of a move? Which is what I think we would want to see. Okay, what else do we have? We looked at a bunch of macro data already. Oh, by the way, you guys speaking about the World Cup, there's a German mathematician who's correctly predicted the past 3 World Cup winners. Put in the chat who you think he picked this time, because he has a new pick. And I mean, look, the guy got it right 3 times in a row. So I think that gives him some credibility, but he has a new person. Wow. Okay. A lot of you guys already know. You guys are some real big football fans. You guys already know this story. I thought I was going to surprise you guys with this story. All of you guys know it already. He did indeed pick the Netherlands. He picked the Netherlands. I was like, hold on. The Netherlands? Like, I'd never hear about them when it comes to the sport, but apparently they have a really good defense. They've been in the finals multiple times, and his mathematical model said the Netherlands. But by the way, I know Messi's competing. Is Ronaldo competing for this World Cup? Is Ronaldo competing for this World Cup again? Or is it just Messi this time? Because if it is, I want Ronaldo to win. Because I think he's too good to... he is? Okay. I think he's too good to end his career without the World Cup. So I'm officially going for Ronaldo. That's my bet for the World Cup. Because I want to see him get one of those. But this mathematician guy said it would be the Netherlands. ASTS right there, 93-21. You know, the one soccer game I've watched, or football game I've watched, is the Messi's World Cup. It's like the one game I actually watched 4 years ago. And I was so happy that Messi won. But yeah, the Netherlands. That's his bet. S&P red candle 731 to 729. This is looking exactly like yesterday, folks. Exactly like yesterday. Google 351 to 348. Like clockwork. I mean, they hit those levels and then boom, they take a red candle down. But they don't take a red candle down substantially enough for you to think you got to get super bearish, because then they'll have a little green candle pop up and they'll just play the same game. It's very similar. Same thing with Palantir, 131 back to 129, but then bounced off 128.78, now back to 129.70. Really, really, really does feel like yesterday's price action. The financials, at least, are green today. Yeah, a bunch of liquidity grabs, basically. Probably from Jane Street at work. I know where Ronaldo's from, okay? Portugal. I'm not that ignorant when it comes to football. But I don't know. I want to see him win. All right, so I guess we're flipping a little green in some places. Microsoft not flipping green, Google Meta not flipping green, Hood flipping green. AMD pretty freaking resilient, 5% right there. But not everything really officially going down. Here's another thing, going to the story that we were talking about yesterday. This is another CEO of a startup. Here's what he wrote last night to kind of prove the broader point around this token story. Our Anthropic bill is about to jump from 400K to 1.4 million a year, not because usage exploded, but because we're about to cross 150 seats. Past 150 seats, you're forced into the enterprise tier. Seats stop including any usage, every token bill at standard API rates. At our current run rate, that's a 3.5% or 350% move overnight. Some thoughts on AI spend. We should spend tokens to grow as aggressively as possible, but most people, including me, aren't conscious of what they're spending. Visibility comes first. People see their personal number and they're shocked. I accidentally spent $4,000 in 3 days on Claude Code. For engineering, the spend is clearly worth it. Pay for the best model. It saves more than it costs. For a lot of other roles, it's questionable. Apps nobody uses, skills someone already built. No ROI. Spend limits are coming. We already required approval for more tokens from our support team. The era of token maxing is coming to an end. So I thought this was really important yesterday as well. You've got a CEO who's spending $1 million a year, up from $400,000 on their Anthropic bill. And even he's saying, look, outside of coding, I don't really see the ROI on a lot of this stuff. And second of all, this whole token maxing thing is ridiculous because we're not seeing an ROI. And so until we do that, we're not going to continue to token max. And the only way you can continue to token max is what Sam Altman said last night. Anthropic and OpenAI lower the cost per tokens, because then you can token max all you want because it's cheap to token max. And I think the assumption is then that there will be so much token maxing that, there will be, as Jensen says, 1 million times more token generation, which means, many, many orders of magnitude more compute, which keeps the AI trade going. But that thesis has to play out. And I don't know if that makes OpenAI and Anthropic good investments, because I don't know what their unit economics look like. It definitely means their growth will be strong, but profitability might not be there. It's just a question of how that affects the broader AI trade as more and more people get involved. CNN, a couple headlines here, says Iran is preparing defenses on Karg Island. CNN reports Iran is deploying air defenses. Iranian military is moving manpads to Karg Island. CNN says Iran is laying mines on Karg Island shoreline. U.S. officials warn Karg Island operation risks casualties. Okay, so we're doing it. We're going for Karg Island. Everyone who predicted this would happen in March, it looks like you're going to be right. It looks like at the end of the day, we're going after the oil, and there's going to be a pretty ugly battle to get the oil. I do not understand how oil prices are not moving higher on this news. I really don't get it. We're at 89.18. We're down 1% on the, I guess the market's assuming that the U.S. is going to win, get all the oil, and then have full control over the Strait of Hormuz. I mean, I really feel like that's the conclusion that the market's coming to. The Q's back over 700. And they're like, okay, war sucks, but the U.S. will get all the oil, and we don't have to worry about Iran holding the Strait hostage anymore. I feel like that has to be how the futures are pricing it in right now. Otherwise, why would oil be down? Right? It's not making sense. Pouncer, flip screen, 130. Zeta as well, 20. As that goes green. Or markets think it's fake. That's true. There's actually, that's good. I mean, either markets think it's completely fake and it's just a threat, or markets are assuming the end game will be way more oil in the hands of the United States. Micron right there, back to 920. And maybe that's happening. Amid the World Cup is today, White House, UFC on Sunday, SpaceX IPO tomorrow. I think Trump is bluffing and we don't attack. Dude, the White House thing is on Sunday? Oh, because that's Trump's birthday, right? Oh, wow. And then you have the NBA Finals on Saturday. Yeah, and then you have SpaceX tomorrow. That would, if we officially announce boots on the ground in Karg Island, I feel like it would kind of hurt the SpaceX IPO. Maybe the market wouldn't care. Tomorrow's also Friday. But that would potentially be not the best here. Nabius 213. 213. Well, folks, markets are holding on. Outside of the Max 7s, markets are not necessarily giving in to a lot of these headlines. Software is also relatively flat to red. Fintech's okay. Energy names getting a little bit of a bid. T1 Energy was $12 a week ago. A lot of the speculative names definitely have fallen off a cliff, like a T1 Energy. Many of them down about 40% this last week. But still red. Is tomorrow quad witching? What dates are quad witching? I think you're right. No, it's next week, Thursday, June 18th. Okay, so it's not tomorrow. June 18th. Bezos is on CNBC. Okay, let's hear from Bezos. His new startup Prometheus just raised $12 billion at a $41 billion valuation. This is essentially their AI lab, where they're not making a model, but they're taking stakes in a lot of these manufacturing AI companies. So they just raised $12 billion at a $41 billion valuation.
Many hundreds of thousands of processes. So what has changed in the last few years is the ability to formulate even something as complicated as that, from design to manufacturing, as an end-to-end AI problem. The result will be what Jeff called the artificial general engineer, but it's really a set of tools that will give those engineers the ability to turn their dreams into reality much, much more quickly than is possible.
Right, so truncating the amount of time, obviously, that's currently exists. We had solar panels on the White House back
That's right.
Back in the mid to late 70s
Yes,
with Jimmy Carter.
Carter put solar panels on.
40 years, 50
They
years
were-
later, we've advanced a lot. But I'm
Yes.
just trying to understand, if you are successful, what that would look like in terms of even something where we think we've had a lot of advancement, solar.
If you think about anything, Vic brought up the example of a jet engine. What if you could, instead of a team of 1,000 people working for 10 plus years to build a next generation of jet engine, what if they could do that in 5 years or 2 years or 1 year? And then extrapolate that through all kinds of technologies. We build these incredibly sophisticated microprocessors and GPUs today with these exotic techniques, ultraviolet lithography and so on, and these exquisite tools that make these chips. There's a company called ASML that makes a lot of these tools, and these are incredibly complex tools. What if ASML could use the kinds of tools that Prometheus is developing so that their next generation of tools could come faster? It's about accelerating that loop. So the kind of dream build loop. Somebody thinks of an idea and they want to go to the next level of technology, whatever it is.
Look, it's a cool idea. Once again, it's not a public company, so it's not something that is easily accessible to invest in. But it is a more credible idea than I think just building another foundation lab, because they're actually looking at business processes within the supply chain, automating those via AI, and then essentially conglomerating many, many companies that do the same thing and just flipping them over. It's kind of like a private equity firm, but like more built on product versus financials. And they're just hoarding a bunch of these companies together and, making them more efficient. And then there's Jeff Bezos, which is always a good name to have on a new project. Marvell, almost 270, as that's making a little bit of a bigger move. 269, this was at 240 last night. Meta, Microsoft, and Google cannot make a move, even though the index is up almost 1%. We're almost at 731. Why is the market green today? Honestly, I think we're just bouncing from yesterday, because yesterday was so bad, because there is zero headlines that I've uncovered this morning that would make you think we should be green. But then again, we are down a ton. So maybe this is kind of naturally where algos come in. We stabilize a bit. Just an ugly day for headlines. ECB raising rates, more jobless claims. OpenAI questioning their entire model of how they price tokens. Trump announcing he's going to take Carg Island officially. I mean, I don't know. Maybe it's assumed that'll be cheaper oil. That'll be easy for companies to continue committing to CapEx. CoreWeave 94. 94 right there. Could be a dead cat bounce. Yeah. See, the worst thing about if it's a dead cat bounce is it's going to start to become a potential trend. And it's very reminiscent of 2022, where the worst part of it is like you felt you were safe so many times and then you got hit. And it's like the broader thesis for feeling like the market should continue to go higher is intact. But if the market's not ready to go higher, then every time you think you feel safe, you just get hit. And like Robinhood, 88 to 85, back up to 87.50, now down to 86. I mean, it's staying within a couple of price points, and about to flip red, about to flip green. You have no real movement to think there's a trend here. Same thing with CoreWeave, from 91 to 93, but down from 100. Sienna, how is that one doing today? That's up 3%. That one took a big hit last few weeks. Mid, do you think Oracle's a buy here? I don't understand why. Well, I understand why it's down. They're issuing more debt and equity. Street's upset about that. But all the growth prospects are going in the right direction. So I don't think they're issuing debt or equity for the wrong reasons. Like, it would be one thing if they were not growing and they're issuing debt and equity, then this thing would collapse. But they're growing, which is what the street cares about. I don't know, man. If they're going to do that 20 billion ATM, this thing might have nowhere to go. And it might just happen on a day where you don't expect it to happen. So taking your shots here, I don't think is crazy. We did have a chance to buy this for a couple of weeks below 150, which I think is more optimal. But again, if Oracle's going back to 150, Nebius is going well below 200. CoreWeave's going below at least 85. Like the thing is, everything will be on sale if it happens. At this point, it's hard to see some of these names go on sale in their sector and the other names not go on sale. And so if it all happens at once, there will be, there will be opportunities. Qs. Wow, the Qs. 706 to 701. What was that 5 minutes that it took to get there? Yeah, literally 6 minutes. At 10:05, it was 706. At 10:11, it's 701. Dude, this price action is disgusting. There's no trend. Palantir back to 129. It was just at 132 or 131. Yeah, this is S&P. We were just at 731. Did I not just say, well, we're up 1% on the day. Now we're back below 730. This is incredible. I mean, it just makes you feel that all the names that are up today are not going to be up, or like are up for a weird reason. Nebius just got hit again from 216 to 211. I don't know, man. This is Microsoft 393 back to 390. I mean, like, there's tons of bad news this morning. So if we were to go red, you could at least blame it on that and it would make sense. But it is the lack of willing to go super red, but then the rejections at any level of a breakout zone that make you think this is just weird. Why is IREN up? I do not know. IREN is up about 3% here. I don't know. The other neoclouds struggling a little bit more. IREN at 53.16. That's up 3% again. Deal on IREN, deal on Keel. Those would be very, very important. Did Meta lose 560? Oh my goodness, Meta lost 560. This is, bro. This is crazy. This is crazy. Mitt, do you think Meta, Microsoft, Amazon, Grab, Google are all deals here? Yeah, they're all deals, but once again, none of them have moved this year. It's the same story and over again. All of these are fundamentally strong companies that have growing cash flows, growing profits, growing revenue. Everything is up and to the right. Go to whatever stock analyze platform you put in any of those companies. Look at every metric up and to the right. It's all growing. It's just the stock price that's not moving, which tends to be a lagging indicator many times and historically catches up. The problem is there are so many narratives, whether it's international, whether it's oil prices, whether it's CapEx, Mag 7, free cash flow, debt equity, debt issuances. Like, all of those narratives put together make it kind of hard to be excited for those names to go up in the short term. In the long term, sure, but no one cares about the long term. Everyone cares about, next month. And so buying Meta 5 years from now at 560, I think is going to be a great investment. That's like, can you close your eyes and just like buy it and not care for the next 5 years, or at least the next 3 years? Same thing with Microsoft, same thing with Google. Alpha wise, no, I don't think there's alpha in Microsoft, Google, and Meta in the short term. There's just not. Everyone knows about these companies. Everyone knows about the issue of these companies. These companies are phenomenal investments, but the alpha in the next 3 months on these guys, unless we have a massive bull reversal, feels less likely, right? Having said that, it doesn't mean they're bad companies. If anything, it means they're the best companies out there. And you should be wanting to buy these companies when they're hated. It's just, again, doesn't mean they're going to recover overnight. Oracle, again, issuing $40 billion of debt and equity yesterday. That's also why they got hit. VIX now 22 is going up. Yeah, the VIX is moving a little higher. It was down 5. Now it's only down 3.1. Tanner said yesterday that you have a shirtless Ronaldo in your bathroom. How did Tanner know that? I'm going to have to text him and figure out how he found that out. Rocket Lab 108. That is down from 110 as well. Yeah, where is Adobe? They have earnings today, right? Adobe 224. Dude, Adobe went to 260 last week. My goodness, they've come back down. No, sorry, 279 they went to last week. 224. Is this the 52-week low for Adobe? This is the 52-week low for Adobe. This is losing the April 10th lows. Wow. What about Salesforce? Is that the same? Salesforce is $2 away from losing the April 10th lows. Palantir is about $5 away from that. ServiceNow has to get back to 80, so ServiceNow has some room. But Adobe and Salesforce basically right there. I mean, it is definitely ugly. It is definitely ugly. Mid are going to Tanner's meetup? Probably. We'll probably be there in Toronto. Tanner was shit talking you yesterday. He's calling you gay. A response is needed. Dude, you guys are hilarious. I was talking to Tanner after the stream. You guys just love stirring up drama and beef in the chats. Tanner was like, yo, so on my stream, I made a joke. I'm like, dude, I don't care if you made a joke. Like, he's like, yeah, but the comments. I was like, it's just so funny, dude. We can't say anything about each other without all you guys ratting on us and saying what we said. He's like, I'm sorry, man. I didn't mean. I was like, Tanner, I don't care. Like, it's a joke. Like, but it's just hilarious because, you guys try to make it a big deal. Now, me and Tanner should cooperate and say mean stuff about each other just to mess with you guys. I feel like that's what we should do. We should say some like really mean shit about each other and have you guys try to tell on us in each other's chats and just laugh about it. I think that's what we're going to do. Some reverse psychology on this shit. 727.46. Just know if you can't make jokes about your friends, they're not your friends. Like if you can't actually make jokes about them, you don't actually have a real friendship. It's like the whole point of being friends with someone. It's to make fun of them. At least for guys, I would say. Micron 910 loses 920 as well. I think I should do a cage match. Oh my gosh. Yeah, snitches get stitches. Does anyone remember that? It was hilarious, bro. Yesterday on the freaking Oracle stream, there's like 20 people from his chat. Man, did you hear what Tanner said? Did you hear what Tanner? I was like, dude, I don't give a shit. Like, it's a joke. S&P still red or still green, but not really encouraging to hold this. Sachin says, while it feels like 2022 based on stock prices, the key difference is that back then revenue, EPS, income was slowing quarter over quarter, year over year. Inflation was out of control in all aspects, no AI boom and investment thesis. I think that's fair, Sachin. I think in 2022, the fundamentals were horrible, like really horrible. And we had runaway inflation and we didn't have this like AI, massive growth tailwind. So price action, very, very similar to 2022. And it's only been a couple of days, but still it feels like it. Microsoft back below 390. But fundamentals wise, we're not there. The only fundamental case to make this argument between 2022 and now is if you assume AI is a bubble. If you assume AI is a bubble, then yes, you could make the argument that the COVID boom that we had was a bubble inflated by artificial M2 spend and advanced hiring for no reason. And, Zoom got to be $500 a share. Like if you assume that type of bubble exists with an AI, which I just don't think that's true. I think there's some valuations that are extended, but I do not think the fundamental core tenets of AI are rooted in a bubble that's waiting to pop. I think there's different questions about unit economics and stuff like that, but I don't think it's fake. So if it's not fake, then I feel like this is more the market trying to catch its breath versus a 2022 type of recap. Maybe that's it. Hormuz isn't straight either. That was the joke Tanner made yesterday because Trump spelled Strait of Hormuz like STRAIGT. And I think Tanner was like, oh, that's the type of straight Amit's not. And then all you guys came in the chat saying, oh my goodness, did you hear what Tanner said about you? I was like, guys, it's okay. It's okay. Yeah, there it is. I wonder if he writes out his tweets or if there's no way he writes out his tweets. But whoever did that completely spelled it wrong. And it's like, this is the president of the United States. Can you at least spell Strait of Hormuz correctly? Like, but that's how they spelled it there. Oh my gosh. All right. So what else do we have going on? What are the suits saying? What are the suits saying here today? Are they telling us to just buy SpaceX? Why is Jeff Bezos still on, bro? It's been like 20 minutes. Why are they talking to him for 20 minutes about a company none of us can invest in? Hold on. Let's see if they're asking him about trying to get that soundbite out.
Is this the death of that? If you succeed?
It's not going to be the death of that. There are products today, big ones, airplanes, jet engines, where CAD systems are the system of record. At the same time, for decades, engineers have worked with tools that descend for drafting.
Okay, no one cares about that. I mean, it's a lot of time talking about a startup that no one even knows how it's going to work out yet. I want to see if there's any Karg Island coverage. They paid for it. Dude, does CNBC do paid interviews? Are you allowed to do that? I feel like there's FCC laws against it, where you're not allowed to take money for someone to be broadcasted on your, like, if you're an independent media outlet, of course you could do that. And it's like payola with music, right? Like, you technically, like, a record label can't pay a DJ to play a song on the radio. That's legal, even though it probably happens under the table. But I don't feel like CNBC could get away with that. They're too big of a station. Maybe I'm wrong, though. Maybe that is what's happening. 729 S&P. Adobe is still red. How do you prove that? Yeah, I mean, that's usually why people still engage in it, right? It's hard to officially prove it. Although some DJs have, some stations have gotten in trouble for that. 389 on Microsoft. Still going down. Dude. I want to buy Microsoft, but I also think they're going to dilute. $389. I also want to buy Meta here. I've been buying Meta this year. I want to buy more. 561. 550 was the price I was looking at, but I don't know if I need to be greedy enough for 550. The problem is if Meta comes out and dilutes, it's going down. Like, this is the thing I can't get out of my head around all the Mag 7s. Like, they're going to do that. There's no reason they wouldn't do this. Amazon literally just raised $30 billion of debt in the past 2 days. But we're almost at extreme fear. And it's like, nibbling here is not crazy. I don't know, man. I don't know. Dougie, thank you for the gift of 5 memberships. Appreciate you, Mr. Dougie. Thought Meta announced dilution last Friday. No, that was a rumor. That was a rumor. So they said it was speculation, but I mean, I feel like they're going to try to do it. Let's see what else we have. Put call ratios starting to spike up. You got more people buying puts. Bloomberg, a possible meeting next week between Indian Prime Minister and Trump offers a chance to reset ties following the year of strained relations over tariffs, Pakistan, and now the war. India's back to buying oil from Russia because they need cheap oil. They weren't going to do it, but then the price of oil skyrocketed. And so, obviously it is up there now for them to be able to get cheaper oil. ASML still holding on to its move today. Microsoft is almost at a 52-week low. They don't have the cushion for the stock to fall from the news. I don't think their CEO wants to deal with that. Yeah, but same thing with Meta, right? So how did the Financial Times get that quote that Meta's thinking of doing it? You know what I'm saying? Like Meta's also at 52-week lows when that was announced on Friday. And then Meta didn't deny it. That was the thing that pissed me off. Meta said we are always looking into creative, it was the most corporate thing you could say. They didn't flat out deny it, which makes you think like maybe they don't do it, but they're definitely not going to say they're not going to do it. Because what if they want to do it? And what if they say, hey, look, the stock was, $88 in 2022. It's up more than 5x since then. If it goes back down to 450, 500, like, yeah, it's some short-term pain, but think of all the growth we're going to have over the next decade. And maybe that's how they tell themselves it's justified. Google got the easy way out by saying, look, we're at all-time highs. Like, you kind of can't blame us for it. Meta, Microsoft, Amazon obviously don't have that luxury right now. Are we having Macro Thursday with Chris? Yes. We will have Chris on later today. We have Adobe earnings, and then we have Chris. On Adobe, so we have Adobe and Lennar today. Street's looking like 8% move on Adobe, so it will be a bit volatile. I think last time it fell like 12% on earnings. Adobe 223. Wow. Adobe losing April 10th lows pretty dramatically right here, down 5% on the day. Amcor is up a little bit. We'll have Jose on in a couple minutes as well. I'm really curious to get his thoughts on this Wall Street Journal piece on OpenAI yesterday. So we'll talk more about that. Rocket Lab 109. Mate, are you full porting SpaceX? I will not be full porting SpaceX, although it might end up working. Who knows? I don't know, man. I've already talked about the SpaceX evaluation, but it doesn't make sense to me. I still think it'll do well. It just potentially is going to be a challenging valuation. The Nebius co-founder, Roman, did a podcast yesterday. He had some interesting things that he said about supply and demand as well when it comes to compute.
We actually raised prices just a couple months ago, and we still have fair pipeline pressure on supply. And again, we don't really know where is the balance. And I will tell you why. It's not only us being greedy and want to get like as much money, and like then people in the shortage will have to pay. For some extent, it works. Like people needs compute to build, but then there is a point, and especially it's less in training, because in training it's like one-off cost. But if you believe that we're moving to inference, and inference is the cost of serving the customer, there is a level where economics doesn't work, and the economics of the products of our customers, if they work, they can grow, and then we can grow with them. We actually raised prices just a couple months ago, and
this is another clip from that interview.
Not overnight, but we definitely have demand for that. And I think the key question for us, it's not do we have demand or not, but how we actually build a portfolio of demand. Because you have so many customers on this market that you can balance between. And again, to the point of 4 layers of the product, you can sell bare metal, you can sell managed customers, managed infrastructure, you can sell inference, and maybe in the future you can sell some new layers of product. And I think what we try to do is to build quite diversified portfolio of customers. We believe that the higher stack we move, the more value potentially we can create for the customers. And actually, the higher stack we move, the bigger population of the customers we can serve. Because again, like on bare metal level, you have maybe a dozen of the customers in the world that you can work with. On managed infrastructure, there are hundreds. On inference, there are thousands. On agentic, there will be tens of thousands of new developers that build it, right?
So the demand outlook that Nebius is saying for inference, agentic workflows, and ultimately building compute seems to be incredibly strong. They have the ability to raise prices, which is always a good thing. But the reason they're able to raise prices is because customers are getting value out of paying for that compute. My question becomes, okay, when token costs go down, what does that mean for some of the neoclouds that have to potentially either adjust their pricing or potentially have an explosion of demand because there's, many more people that are using these tokens? And if anything, you could interpret it as bullish for the neoclouds, unless it affects the velocity of the demand, which could then be seen as bearish because then they have to lower prices. But if Jensen's right that compute's going to 1,000,000x, Sam Altman brought that thesis forward last night with the idea of slashing costs, and theoretically that could be good for a lot of these other smaller players. Microsoft right there at 389. Fars news agency: Iran is considering adding Elon Musk linked assets and businesses in the Middle East, including Starlink infrastructure and Spacex related investments, to its military target list. Okay, Iran trying to mess up this SpaceX IPO. If they take out some Starlink infrastructure at this point. Nate says the efficiency and value of that token is exactly why Nebius wins. It's literally the Nebius bull case. Yeah, I would agree. It's the ability for them to actually deliver to their customers the unit economics and efficiency on that token generation versus their competitors, which makes them the right neocloud of choice. All right, folks, let's bring on someone to the show and get some of their thoughts and what's going on in the world of semis. Ladies and gentlemen, Mr. Jose.
What's going on, man? Good morning. Good morning.
What's up, man? How are you?
Pretty good. How about yourself?
I am good, but I've got some questions. So
hopefully I can answer them.
I would trust your opinion on these questions more than a lot of people. Jose, so I'm confused. I want to know why Sam Altman is lowering these prices on tokens, why he's so easily saying Anthropic's going to do the same, and if this has any impact on the broader AI trade, or do you think there's just going to be so much usage that it's not going to matter and all the compute constraints are still going to exist, if not get better, or if not get worse, theoretically, if these costs come down dramatically?
Yeah, so I mean, I think in the top end, in the optics of it looks pretty scary, right? We're pricing lowering, but this is something that we have seen throughout this whole AI innovation. Tokens have gotten cheaper every single year. The main reason is the efficiency of the software, the efficiency of the chips. I mean, NVIDIA, right, with their Blackwell platform, right? I think it's been like it's been reported that it's about a 50x improvement on cost of tokens. So if you're getting a 50x improvement in price of token, the charge of your token is also going to get cheaper, and you can still maintain the same type of margins. So I couldn't see the paywall behind it. I wonder if they went the math. They did that math of like, hey, even with the price decrease, do you still maintain the same margins? And the answer could easily be yes, just because of the efficiencies happening throughout the ecosystem. The other thing is, because we also heard from Google, right? I think Google mentioned recently that they are lowering their entry-level AI subscription. I think it went from $7.99 to $4.99. And my thinking is this: as a typical consumer, your average Joe is not going to need the most expensive model out there, right? We're most likely asking, hey, how do you fix this? How do you do that? I don't think your average Joe is using it for some state-of-the-art coding or to make some app development. That's where the $200 plus subscription is really worth it. But if you're only paying $7.99, you're most likely only using it for simple things. And for simple things, you only need a certain amount of model, right? We've seen all these companies have like light models, flash models, like for Gemini. So my thinking is for those consumer, I think we're going to focus on those cheaper models. And that's why we're kind of lowering the price on them, because they don't need to have if you're only asking a few questions, you don't need to be using state-of-the-art models for that. So I think there's so many changes happening, that there's so many variables in the AI market that just looking at price reduction screams bearish for the AI space. But at the same time, what you're hearing from all these companies, especially in the AI servers, demand is insane. I mean, Supermicro, I'm not a huge Supermicro fan, and you know that. I'm not just not a fan of the business, of the business. But last 2 days ago, they raised they plan to raise $7 billion. And on the conference that they recently had, they mentioned that it's not because they needed more money for old orders. Since their last earnings call, which will happen, I think, on May 5th or May 6th, they added an extra $38 billion in sale. That was not included in their earnings. That's what they're saying on the conference. I mean, with Supermicro, obviously take it with some grain of salt there, just because of some of the issues they've had. But if you're getting 38 billion new orders since their last earnings call, it does showcase that this market is accelerating like crazy. So optics look scary, but the actual data, I think, are showcasing other stories.
So your argument here is that the way this is going to make sense is if the costs go down so dramatically, which is kind of the point of that article, that the usage goes up even more dramatically, which is going to offset it's just a simple volume versus pricing argument here.
Yeah, and also more just the consumer base. I think right now for the consumer base, the usage on the consumer stuff isn't as heavy as kind of like the coding stuff, right? Like I think if you're using a state-of-the-art model, I don't think we're going to see a price decrease on OpenAI's $200 model. I actually believe we might even see a price increase or even another tier. I think on the lower end usage, which is most likely your typical consumer, they're not, even if you're paying $20 or $10, maybe you're not using all those tokens. So it's okay to reduce it, right? In the back end, OpenAI could have a model. Oh, for a $20 model, people are only using about $7 of inference. So maybe we can charge 15 and still have great margins and still be kind of making it. So I'm pretty sure they have some information on like what type of user or what type of tier gets what type of usage, and they can relate the pricing towards that. So I mean, we see Anthropic with Fable 5. That Fable 5 is only going to be in part of their $200 subscription, it seems, till June 22nd. And then if you want to see what it's looking like, if you want to use Fable 5, you're going to have to be in either another tier or you need to be playing for tokens individually. So that's showcasing that the heavy users are still going to be paying heavy amount of money. And we're not going to see price decrease on the higher end, where we could see price decrease on like the lower end market.
So essentially this goes wrong if demand goes down for tokens in general. But as long as enterprises are willing to pay, or enterprises are willing to use it, even if they're not willing to pay some of the crazy prices, and consumers continue to adopt it, this entire thesis plays out. So it's literally just a question of making sure people, which is why I think Sam Altman is going this route, because he knows that if people stop using it, it's really hard to get them to come back. But if I make it basically free for them to use, even if it affects my margins today, long term, the volume grows so dramatically that I'm going to be all right.
Yeah, and I think it's like kind of like that gateway drug, right? It's like not your everyday consumers are not building an app or building any form of business, but that one person that might have paid $10 for the subscription or whatever price, $15 or whatever for the lower tier if they reduce, and then they see, oh, actually, if I go for the 200, like it reels them in. It's like, I'll pay 15, I'll see how this model works, and then, oh, I can actually develop so much more. Now I have to upgrade to that $200 price point. So I think the consumer is really not going to be the driver of your typical average Joe is not going to be the driver of demand. I think right now is definitely going to be the software space in the coding industry, which is what we're seeing, and why we see every AI company or every AI company focus on this extremely heavy. I mean, Codex has become the major point for OpenAI, for Anthropic, right? It's all about Claude Code. We saw even XAI really kind of push that acquisition of, I forget what that company is called. Cursor for software solution. So we can see where the money is, at least right now, and that is that software ecosystem. And right, how many software guys out there or software people are out there? Compared to your typical consumer, I would say the number is low, but the amount of users that those businesses, the enterprise players and individual software people are doing is a lot, and that demand is going to continue to grow.
Are you at all concerned about the open source models that are not as good as Codex or Claude Code, but they're getting up there and they're 80% cheaper? Or do you think Claude Code and Codex will just match their prices so that people will leave?
I think as long as you continue to have state-of-the-art models and you still have a 20% improvement, or in any form of improvement, as long as you're better than the model, people will pay for the best. I mean, if, for example, if you can save me 20% time throughout my work, I would easily pay for it. Time is money. And as long as those economics make sense, is good. I do believe there's going to be certain solutions that are going to run on open models. But those solutions, open models are only bad for the AI companies like Anthropic, like Openai. Open models are still, if you're going to run open models and you're doing crazy stuff, you're still renting out GPUs, right? Like if I want to run Quen, whatever, and I'm doing some crazy amount of work, I'm still going to go to Anthropic, or not Anthropic. I'm still going to go to AWS or Azure or whoever.
But this is the question. If Quen is significantly cheaper than Anthropic, even if you're going through a Google or AWS that is constructing it, at what point do Google and AWS go to Micron and say, we cannot pay your gross margins for memory because we're not getting the same type of return, because the cost to run these tokens through our cloud is significantly cheaper, unless customers are willing to pay Google their same margins so that they can pay Micron their, like, at what point does it actually affect the end stack of, it probably won't affect NVIDIA because they're the monopoly here, but when does it affect some of the other picks and shovels in your opinion?
So, okay, so we're saying, if you end up using lower end models, not lower end models, cheaper open source models,
right?
People, the GPU, in theory, GPU cost per hour should be lower. So in theory, the margins for these cloud service providers will be lower.
Correct.
And then
which means they're going to go to their suppliers and say, this is our margin.
Yeah.
We know you have tight supply, but shit, we can't afford this, right? There's no money for us.
I think that would only be, in my mind, and this is just raw thinking right now, in my mind, that would only be true if demand stays the same, right? And we have a perfect example, Uber, right? Uber cancel reports, not sure if it's true, but Uber reportedly cut down the cost of their AI tokens because people were using it like no tomorrow. So instead of, they probably had a budget of, let's just give a number, 10 billion. But they probably, that's not true, but I'm just kind of thinking out loud. Let's say they give a budget of 10 billion, but they spent 15 billion. So they got so mad and they say, look, we're not going to do it anymore. If they use 15 billion out of the 10 billion, that means they had so much more demand than they originally thought. So if you kind of use an open source model, which in theory should be cheaper, will they still use that $10 billion? And the answer to me is yes, because if we already saw that in a state-of-the-art model, they went over it, that means that probably on an open source model, they have so much more growth opportunities that even though it's cheaper, and that's kind of that whole demand thing, I forget what it's called, that paradox, I forget what the theorem that people talk about. Yeah, so it's all about that demand story. And what we're seeing from Uber, at least from that example, is that, yes, there's so much demand right now that the issue is cost itself. So if you want that demand to actually pick up, you have to make these models cheaper, and you will see that, hey, Uber is one company, but imagine all these other companies out there that are saying right now tokens are still too expensive, so we're not even going to touch it just yet. So at least right now, I do believe this paradox is still heavily applicable to the AI semiconductor industry based on those stories that we're hearing of companies going over budget.
Yeah, it really comes down to volume. If prices actually collapse, which is kind of what's supposed to happen in a capitalist endeavor, like these AI models that are trying to pursue, like, you want costs to come down. You also want demand to be exponentially higher, and then that just points to the the credibility of if the models actually invite that much demand.
I would say just one more final thought before you move on here. We're still not really in robotics, right? In robotics or autonomous driving, if that happens within the next 3 to 5 years, I think that's just another added wave of demand into this story. So it has to go with the rate of innovation of AI. And I think that's something I've always said, that if AI stops innovating, that's when I get worried. And excuse me, but at the moment, I don't see any of that innovation lacking, especially just with Fable. I mean, yesterday I mentioned to you, I tried to create an app, and like in 15 minutes, 20 minutes, I was already burning tokens, and I had to shut off because I didn't want to pay hundreds of dollars in in individual tokens myself.
So doesn't that mean that literally Anthropic and OpenAI are the linchpin of this entire trade? Like, it's not NVIDIA, it's not Micron. If Anthropic and OpenAI stop putting out really good models that push the barriers to get you to more innovation. I mean, OpenClaw, this whole agentic revolution, this happened in the past 5 months. Like it brought all, like Jensen's only been talking about, compute's going to 100 million X or whatever, because you have these agents that are running 24 hours a day autonomously. But this happened in the past couple months. So it's like, if we don't get those next evolutions, and really the only companies that are going to be able to do that, maybe you throw Gemini in there, but it's really Anthropic and OpenAI, then no matter how much people hate those companies, they are the linchpin of this trade.
Yeah, I think there's some truth to that for sure. And I'm happy that both Sam Altman and Dario and even Elon, you can throw even Elon maybe with XAI a little bit in there. They're all very egotistic maniacs that they don't want to lose. None of these want to lose. And that gets me excited, because I know that makes me believe that this market, they're going to continue to innovate, because you don't want to be that loser. You don't want to have Sam Altman be able to, right? If you're Elon or Dario, you don't want to see Sam Altman holding that AI crown forever. Maybe if the CEOs of these AI companies were very passive, I would be worried. But all of these guys are ego crazy maniacs. And I think they're going to push for massive innovation. Now, I don't know if that's the best thing for safety of AI. That's a whole different story. But at least for the innovation in AI, I think having egomaniac CEOs pushes this to continue to innovate. And then you have other players, right? You have so many people leaving OpenAI. You have so many people leaving other companies to kind of start their own endeavors. And I think that ego, that I can do it better, it pushes for innovation. And that, we're just into software, right? I'm going to guess there's going to be ego crazy people in the robotic space, in the healthcare space, right? In the transportation, in smart city, in privacy, in cybersecurity. Right, you want to be that cybersecurity company guy that says, you know what, I can do this so much better thanks to AI. I'm going to escape. So I think AI is creating this AI innovation, and it's allowing these ego crazy CEOs and people to just really try innovation and take it to some crazy levels.
Okay, so with all these egomaniacs spending more on CapEx, like Oracle last night, 40 billion increase, why is NVIDIA continue to go down, in your opinion?
Market is stupid. And that's my ego. That's my ego speaking to the market. Yeah, no, I mean, I can't give an answer there. I mean, this is, it seems almost NVIDIA's winning market share, right? We just kind of got there working with Apple. Apple and NVIDIA have been beefing for God knows how long. Right? You really haven't seen Apple really be a customer. And now they kind of said, you know what, we're going to end up working here with NVIDIA. It showcases that even with big egos, with this AI market, you have to put your ego aside and work with whoever is best. And I think that's what Apple did. Now that's market share winner, right? This is a market NVIDIA was not in. They weren't in Anthropic just a few months ago. They got market share from Anthropic. In theory, right, robotics eventually will become a big thing. The robotics market is extremely slow right now. There's market share growth as this market TAM continues to expand. Forward PE ratio of NVIDIA is probably sitting at lower 20s, if not maybe even in the high teens.
Right.
Multiple expansion will happen at one time, right? The market is going to be like, oh, you know what? It makes sense. I don't mind being patient investor, accumulating some shares at these forward PE ratios, and waiting for the market to wake up. The market right now has an ego of thinking that a $5 trillion company can't grow anymore. But if the return is there in ROI for a lot of these players, then I think it's gonna eventually again, now just a forward PE ratio expansion to 30 is what like a 40% growth, 33% growth, 40%. That is crazy on stock price there.
Yeah, I think that's fair. I also think NVIDIA is just too big. I mean, like, can we imagine a world where NVIDIA is at 250 and the S&P is not at all-time highs? There's just no world, right? Like, I can't realistically think that could ever happen. I think NVIDIA has to move with the market. It has to be a bull market. If it's a bear market, NVIDIA can't move up. And for NVIDIA to do a 180 against the entire market, it's just such a big company that much liquidity is hard to put into one name.
Yeah.
So I would agree with that.
Yeah. I mean, obviously, yeah, 5 trillion, and now with all this money, I mean, you have so many now new trillion-dollar companies. The fight for money is real, right? You have trillion-dollar Micron, you have almost $2 trillion Broadcom, you have multi-trillion-dollar Mag 7s. You have multi-trillion-dollar companies coming into IPO. So the fight for money is real, right? I'm still not a trillionaire, so I can't buy them all, I can't collect them all, but it's you got to find ways to put this money, and it's definitely a fight for money right now.
Let's talk about Broadcom Oracle real quick. Broadcom, you saw the earnings. I think everything was good except their guidance increase. Was there any red flags or things to be worried about? And why do you think the stock fell from 480 to 375?
Yeah, I mean, I thought earnings were pretty good. I just mainly because I don't want to just continue to diversify into other plays, but I think Broadcom is sitting very attractive here. I think forward PE ratio I was just looking at yesterday was in the in the mid 20s. I think it was like forward 24. And one thing that not Libutan, Hawktan, said was he sees exactly this. We see that continue to 2020. Not this quote. But he does mention that 3 months ago, demand only pushed till 2027. He said in the last 3 months, like in the last 3 months, it has actually pushed for demand has become visibility till 2028. So I messed that up. Originally, he said, if you would have asked me 3 months ago, we only saw visibility of 2027. Since then, we've actually seen kind of movement till 2028. And everything else that we're hearing, right? I mean, Supermicro, that extra $38 billion of announcement, I think gives solidification that that's true. Google, even if might be kind of I know you mentioned a little bit of a help to the IPO, but Google kind of making this partnership with SpaceX, even if it's a short term, showcases that demand, at least for right now with what they're seeing, is crazy. So I'm happy to see that demand is now pushing till 2028.
Oracle, you and I both covered the earnings last night. It seems like everything was fine. It's just the street's upset at the equity dilution, it seems.
Yeah, I mean, RPO grew like crazy. They mentioned if of the recent RPO, most of the RPO is also people prepaying or bringing their own hardware. Bring your own hardware instead of bring your own tricks is what they did. And it's 12% of the RPO, so close to 70, 80 billion is going to be expected in the next 12 months. What else did they mention? They mentioned they're at like crazy utilization, almost 97.5% utilization on GPUs. I think they mentioned like 93% of all of them get renewed after they end or close to ending. What is scary about that? I mean, obviously, I think the market is sharing the scare for Oracle. It's a little bit of the fear of the dilution, a lot of the fear of the dilution, the increase in CapEx, much higher than analysts expected. But the demand, Oracle's earnings made me even more bullish in neoclouds. And I feel like a lot of the things that have happened in the past few weeks has made me extremely more bullish in neocloud players. From the Fable 5 release that you're burning tokens in less than 2 hours, from the news about Supermicro, the news here, Apple getting into the AI market finally, and AI cloud. I don't. And I see Jose hasn't been bearish a day in his life.
Hey, if you ask him about fintech, he'll get pretty bearish real quick.
I'm always bearish short term, right? I always believe the market is sometimes pricing things a little bit too highly in the short term, especially for certain semiconductor stocks. I think in the long term, I'm still a long term bull, right? That's definitely a thing.
What is the most overvalued semiconductor stock right now?
That's crazy because I don't want to say a name and everybody hates me for it. Let's see. The most overvalued in the short term.
It's gotta be Marvell.
You made enemies with me. I don't
it's
know.
Gotta be ARM or Marvell, right? Like they're both. I mean, ARM's trading at.
I like saying ARM for sure. I think Marvell, yes, on long term, a lot of the long term opportunity. I think it's crazy. So Marvell and AMD, I see that a lot happening. And Intel, a lot of these are priced to perfection, but I think the success rates are pretty high based on my knowledge, right? Based on what I've studied. The markets that I feel like I would say are overvalued are the markets that I believe the price targets or the prices are heavy right now or priced to perfection, but I don't know the long-term opportunity, right? Like I don't know optics too much. I know the shortage in the kind of the laser components and the wafers and stuff like that for optics, but I don't know kind of the growth opportunities, and I don't know like the historical 4PE ratio. So for me, the ones that I would say are overvalued are unfortunately the ones that I really don't know too much about, and that's why I would kind of like halt on it.
Yeah, that's fair. And again, a lot of these names could be overvalued by conventional metrics, but if they continue to get the growth, Intel with that Google partnership yesterday, it really breaks down if they actually are overvalued or not. Last question for you, Jose. Again, thank you for joining. Jose's Twitter, I'm looking right here in the chat, and his YouTube, also his newsletter, What the Chip Happened, linking that in the chat as well. These Max 7 names falling off a cliff, Google, Microsoft, Amazon, Meta, all of them new 52-week lows. I mean, I know you're bullish on all of them, but any updated thoughts on kind of how you see the equity dilution, the Max 7 trade, AI CapEx build out? At some point, does the market just keep buying the beneficiaries of CapEx and selling off the people spending it, or what do you think happens with this trade?
Let's see. So I think CapEx growth is going to continue, and I do believe we're going to continue to see increase in some form of funding, one way or another, either being a bonds, either being debt, like or dilution, like we're seeing with Google. I think that's going to continue. We are now a lot of data centers are going to turn on in the next 3 quarters, 3 to 4 quarters. And that seems like a long time for some investors, especially some of us that might be some form of gambling degenerates. 3 to 4 quarters seems like a long time. But I think in 3 to 4 quarters, you're going to see a huge growth in data centers. And the street is not prepared to see that type of growth rate and acceleration continue on cloud. And they're finally going to say, you know what? This CapEx story is okay because now we're really growing that AI story. I mean, Amazon, all these players have said that it takes about a year, 2 years to really get the new GPUs turned on from data center building, from everything on to really start getting that revenue collection. Revenue collection is going to come out of nowhere for these cloud service providers. And your Amazon, your Google, and your Microsoft, while they're already accelerating, we're still seeing strong growth. I think in the next year, the numbers are going to be continue to impress investors, and the market is going to wake up. And I don't know if that's going to happen 3 quarters from now, 2 quarters from now, 4 quarters from now, but I am very, very bullish in the Max 7s. And you can even add Qualcomm in this list now if you want, right? I used to be a big Qualcomm hater until like maybe 6 months ago, and I actually did a video that I was wrong on Qualcomm. And the stock started to maybe do a little bit negative reaction there. So I don't know if there's some correlation to me liking the stock and stocks going bad. I think the market is going to be surprised within the next 12 months. And I don't know when it's at, but I believe there's a huge safety net in a lot of these names.
This general sell-off we've had over the past couple of days, I would imagine you assume it's just exhaustion that the market has had with the trade. Or is there a different reason that you have?
Sorry, can you repeat that one?
The general sell-off we've had over the past couple of days, you would attribute it to just AI is exhausted as a trade right now? I mean, is there any reason that you would put on it?
No, I think it was just that. I mean, just the past 2 months, I forgot, someone posted, it was like the past 2 months, no one cared about the reason why these stocks were rallying. It was just like, hey, we're going to rally the whole semiconductor industry. I think now the pull-off is okay. I mean, even if you got in 2 months ago in the semiconductor space, I think you're pretty much still green in a lot of these names. Astera Labs, right? I think it's like 250 plus. A lot of these names you're still up like at least 50 to plus on a lot of these names if you just got in 2 to 3 months ago. So I wouldn't attribute to anything except maybe just valuation stretched recently and just pulling down. But AI story is still kicking for me, kicking hard.
Is that a World Cup analogy? Do you care about the World Cup?
No, not at all. Not at all. It's because my name's Jose. I see. Chat, and let me say, chat, Amit still hasn't offered me to take me to dinner yet, right? I think most of you guys remember he said he was. He still hasn't. So I don't know why you guys don't hold him accountable, but you guys need to do a better job.
A little thing called COVID happened within that week, but we will make this happen. All right, Jose. Appreciate you, man. Thank you so much for coming on. Jose's YouTube and Twitter right here in the chat. Please make sure to follow him, and we will talk to him next week as well.
All right. Take care, man.
Appreciate you. Later. All right, 11 a.m. and we go red again for the day. 11 a.m. we go red for the day. It is literally looking like yesterday. NVIDIA loses 200. SPY loses 725. That's a new low for the month. Meta, 560 and below. Q's, below 700. ServiceNow, almost below 100. Adobe is about to lose 220, which is going to be pretty nasty. We got Adobe earnings on Friday, or not Friday, on the close. Yeah, I mean, this honestly is not surprising. It's just really not. It feels very similar to yesterday. If anything's similar to yesterday, that means we'll get a bounce by like 1 o'clock, and then by 2:30 we'll go down again. So I think we'll have to deal with the choppiness. That's really what it is. It's choppy because I don't trust we're actually. I mean, look, S&P 724. We're only down 0.11% today. It seems like a lot more because we were at 730, 731 not too long ago. But that was just recovering from yesterday. Now we're barely down on the day if you don't include the intraday highs. So are we actually going to go 1% down on the day proper from here, which would put us below 720? I don't know. I think this market's, I think it's too choppy for that to easily happen. I think we'll bounce up and bounce down and maybe we close around this range, but definitely looks like that is happening. Oh, what is this? CNN says multiple floors and corridors inside the Pentagon have been locked down, with others being evacuated, according to 3 sources familiar with the situation. Why are they locking down the Pentagon? Pentagon locked down, hazmat teams responding. Why are they locking down the Pentagon? Let's see if we can get some news on this.
Evacuated. I got a little bit more detail here. According to the Pentagon Force Protection Agency's Hazardous Materials Response Team is now responding to this incident at the Pentagon with the assistance of the Arlington County, Virginia Fire Department. That is according to Pentagon spokesperson, or the fire department spokesperson, Captain Jamie Gill. A post on social media from the Arlington Fire and EMS said that the Arlington County Fire Department Hazardous Materials Team is operating at the Pentagon, quote, during a hazardous materials incident. So there is something apparently affecting the air quality of the Pentagon. A little bit more detail here, according to our sources. Floors 2 through 5 in corridors 4 through 7 of the Pentagon complex have been locked down. That's according to 2 sources. A third source told CNN that police in the building are wearing gas masks and full chemical protective gear. So this does appear to be an air quality hazmat situation that is again causing multiple floors and corridors inside the Pentagon to be locked down. And
okay, that's a bit weird. Hoping everything's okay there. I guess we'll get more updates throughout the day, but that is one of the headlines we're seeing right now, as the Pentagon is currently locked down. Someone ate a lot of beans. Yeah, maybe that's it. Maybe that is it. SPY, a little bounce right there. It's not going to give you a full red day that easily. This stuff's going to be really choppy. NVIDIA back above 200 as well. All right, folks, that's what we got for the day. I'll be back on the close. We'll be back with Adobe earnings. We'll talk some macro with Chris. We'll see what we got for Adobe. Obviously, ugly day for Adobe to report, but nonetheless, we will get the report today. A lot of software stocks hitting very close to those April 13th lows. I mean, all of them. ServiceNow is the only one that's holding up pretty nicely, but Palantir, Adobe, Salesforce, a lot of them breaching some pretty ugly levels. Obviously, NVIDIA getting hit pretty hard here as well. IGV down 2%. So hopefully we get some resolution to this towards the end of the day, but we'll have Adobe. And then we'll see what else happens in the broader macro. Okay, this word I already know. I've used it many times. Zeitgeist. So I know how to say it. Let's do a different one. Give me another one. See if we can go 2 for 2 from yesterday. Okay, that one looks much harder. Panegyric. A speech, piece of writing, or expression that offers high praise for someone or something. The article reads less like an analysis and more like a panegyric to the CEO. Okay, let's see if I got this one. Panegyric. I feel like I've heard this word before for some reason. Let's see. Give me 2 for 2.
Panegyric.
Bro, what? Oh, the G and the Y. Like gyro. Oh, that should have been obvious.
Panegyric.
Did anyone know it was a J? Or it was gonna sound like a J? All right, whatever. We start the streak back at 0. At one point, we were 9 for 9. We will get to that point again one day. One day, we will get there. All right, that is it for me. We will be back on the close. We'll see what we've got going on. Your Paradox, thanks for the super chat. Thanks for the live stream. Thank you for being here. Yeah, lots of different updates today. ECB raising rates, jobless claims higher than expected. Trump either being hyperbolic and saying that he's going to go after Carg Island, or U.S. Cent Command legitimately trying to go after Carg Island. We'll probably get more updates later today. This Pentagon news that just broke. And then you've obviously got the semis trade that is, once again, taking a hit today. So at the bell, we'll get Adobe. We'll talk some macro. Let's see where this goes from there. All right. Thank you, everybody. Appreciate it. I will see you guys on the market close. Bye, everybody. Have a good one.